let's find out what is the right answer. So the question is, which of the following will be recorded as an accounting transactions? And you have four different options. Like number A, you have fire in factory destroying goods worth 50,000. B, dispute between employees affecting efficiency. C, change in government policy. D, increase in market competition. So first of all, you need to understand what is the meaning of accounting. See, transactions every day you are seeing in your bank, है ना? Some customers are depositing, some customers are withdrawing. These are transactions. But what is accounting transactions? Now you need to understand this term, that is accounting. So accounting means whenever you actually involve money. If this money is flowing or inflow or outflow is there, then that is accounting transactions. Yes, always remember, when money flow is there, that is going to be your accounting transaction. So out of these four options in which you can see monetary flow or money flow, only in option A. That is the reason answer A is your right answer. But one more thing I will tell you how to remember this point. See, whenever you uh, see your balance sheet, P&L of any company, are they recording about any meetings or about any discussions or about any particular sort of tour travel? No, they are only and only recording about money. Yes, how much assets they have purchased, how much liabilities they have incurred, or what is the profit that they have generated. Yes or no? So always remember, whenever you see accounting, means we are going to deal with numbers only. Numbers means in terms of money only. So if monetary, flow is there, whether inflow, outflow, any sort of flow can be there. That is going to be accounting. So this is the shortcut which will help you to remember accounting. So the correct answer of this question is answer A. Coming to the next one, the accounting conventions do not include. Yes. Now, what is accounting convention? See, now you know na, what is the meaning of accounting. Accounting means whenever there is monetary flow or money flow. Okay. In so many places, you will see monetary term. Correct. So, monetary term or money flow. Again, I am repeating, monetary term or money flow, both are same. So, you know this term now. Accounting means what? Now, conventions means what? Now, conventions means, see, like when you are crossing any traffic, है ना, or when you are walking on a road, or whenever you are traveling, you are following some sort of rules and regulations, है ना? Suppose if you want to travel from a train, what you will be doing? Are you going to travel without ticket? No, of course you are going to purchase ticket, है ना? So that is the rule that you have followed. Otherwise, you have that option na, to travel without a ticket also. But what you did, you purchased one ticket and then you travel. Correct. So that is some sort of rules and some sort of practices that you are following. Same when we talk about accounting, we are following some set of rules, some set of regulations. Let's take one more example of your bank. Why every day you are going around 9 a.m. or 10 a.m.? Why not every day or on a daily basis you are going your office on random time? Like someday you are going 6 a.m., then 10 a.m., then 12 p.m., then 3 p.m. Can you do like that? No, because you are following some set of rules and regulations, and that is compulsory and that is common for everyone. Yes, understood this point? That is the same thing conventions, that is the same thing businesses are following. See, I am telling you in a very simple terms so that you can remember it, you can link with it. Yes, so accounting conventions means there are some sort of rules and regulations which you need to follow. So when you are following it, means you are preparing your balance sheet, P&L, as per required government, or as per required, you can say top management, yes, or as per shareholders. Yes, so here they are saying accounting conventions do not include. Now there are different set of rules and regulations, not only one rules and regulations you have, there are different set of rules and regulations. So let me tell you one by one. So first is your conservatism, yes, or you can say prudence. See, this is your prudence or conservatism. So conservatism means what? Whenever you identify any, anticipated loss. Anticipated means you have estimated that in future, after 1 year, there will be, let's say, 10 lakh rupees loss. So that is going to be your recording part. Means you are going to record in your books. Okay, means you will maintain it. Oh, after 1 year, this is our estimate that some case is going on right now, and after 1 year, you need to pay, or might not you need to pay around 10 lakh rupees. So that is you need to record. But you will never see any estimated profits. You will never see any estimated profits. Why not? Because no, then if you are recording this also in your books, means you are going to fluctuate, and no one likes to share their flaws. Yes or no? Everyone tries to give their positive side, and then no one shows actually their actual behavior. Correct? Yes or no? So remember, always if you are recording estimated profit, so just think about, Kingfisher. Why they showed huge loss? Because if estimated profits are allowed, then whatever losses they have shown, like 1400 crores, they have adjusted with estimated, profits. Let's say 6000 crores. That is their estimation that in next 6 years we will earn this much. So they will show, or they could have showed this much profit. And you know it, this is not a real scenario because actually they are in a loss. So this is just an example. So always remember to show true and fair picture of your business. You cannot add any sort of estimated profit. If you're doing it, means you are making mistake. Yes, if you are doing the same thing, estimated profits that after 1 year, after 2 years, though right now, let's say I'm in a debt, I'm not at all earning, I'm in a total debt. Let's say I have taken 1 crore rupees loan, but I'm saying to my debtor, creditors that please don't worry. Hana, today I'm in a 1 crore loss, but after 3 years, I will be earning. So are you going to give me any further amount or any further investment amount? Just think in that way. Again, I'm repeating, just think my existing debt is equal to 1 crore rupees. Already I have taken loan, from friends, companies, banks, 1 crore rupees. And what I'm saying to you, you are my friend. Friend, as you can see right now, I have 1 crore as my debt. But you know what? After 3 years, I'm going to earn 5 crore as my income. So, based on this statement, please give me 20 lakh rupees loan. Now tell me, what decision are you going to make? Are you going to give me 20 lakh rupees loan? Or are you going to say, okay, I will think and will inform you? Hana, what you will be doing? Of course. You will say that I will think and I will let you know. Hana, so that is the same thing you need to follow in your businesses also. That is the reason estimated profits are always ignored and losses, if you have in future, estimated one, you are going to record. That is what conservatism. So that is a part of conventions. That is a part of rules. So that is why this is not the right answer. Then consistency. Consistency means you are following the same set of strategies. You are going with the same sort of rules and regulations. Yes, consistency that every day you are following some set of rules. Why every day you are going at 10 a.m.? Why you are joining this class at 6 p.m.? Because this is what consistency means. You are following, you know, uh, following that same path. Same thing in businesses. If you're following any one sort of rules or any one set of rules, every day you need to follow that same set of rules every year also. So that is what consistency, that is again one part of rule. Full disclosure. You cannot hide from your investors. You cannot hide from your lenders. So always remember you need to disclose each and everything, whether that is loss, whether that is any, cases or any type of information which is relevant for your investors. You need to inform it, and that is what full disclosure convention. So these are sort of some rules and regulations which every business needs to follow, but there is no such type known as depreciation. So right answer of this question is going to be answer A. See, I'm explaining in a very detailed manner, so if you are reading it for the first time, then of course these points are going to help you. So correct answer is answer A. Yes, and for this answer is your answer B. Correct, Chali. Now coming to next question. So let's read this because in JIB now they are asking in a case-let manner question. So let's deal with this question now. A business purchases a high-speed computer for 1 lakh. Now, the computer is of a premium brand and has a superior processing efficiency. Now, how will this transaction be recorded? Means now how you will record this transaction in your books. Now, whenever we say accounting, Hana, means basically how you're going to record in your books. That is what we need to identify. A, at 1 lakh along with the details of efficiency, B at 1 lakh along with the brand name, C only at 1 lakh, or D at market value considering efficiency. So tell me how you are going to record this. So basically whenever you are purchasing any sort of, you can say, assets or any particular payment you are doing, or like in your bank whenever customers are depositing, you are just writing the amount in their account, है ना? You are not recording each and every detail that at this point of time, at 10 a.m. customer visited and he deposited 20,000 and now he's withdrawing at 5 p.m. or he said to transfer in any third account. You are not recording each and every story. Yes, same thing businesses, you are going to record only and only monetary transactions. You are going to not record any sort of, you can say, informations or any sort of stories related to that transaction. So for this, right answer is going to be answer C only. You are not going to record any details, or you can discuss with your friends and colleagues about the, this computer, how smart this computer is or how efficient this computer is, but you will not record in your books, especially in your balance sheet and in your P&L. Yes, so you will record only at 1 lakh rupees without telling any further information, as you can read here also. Okay, just give me one moment. Now let's read this paragraph. So, as per this paragraph, accounting records only the transactions of financial character. Financial character means money involved character. Yes, if money is involved, you will actually record that transaction. Now, accounting records only those events and transactions that are financial in nature. Yes, financial in nature, in which actually money inflow and outflow is there. For example, a very high-speed computer is bought by a business for rupees 1 lakh. But entries in books of account will not record computer efficiency or the brand name as such, but record only the cost price. Means in your books you will record only rupees 1 lakh and computer also, not even brand name. Hana, you will record computer only. So this is how you are going to record in your books. So this is the point you need to remember. Now, coming to next question, everyone. Let's read this again. One case-like pattern question we have, because in JIIB nowadays they are not giving any direct question or a one-liner question. So let's read this question now. Mr. Raj, an accountant, purchased the following for his business. Okay, so Mr. Raj purchased different things. So A means first is given raw materials for production. B, C, that is two, machinery for manufacturing. Three, finished goods for sale. Now he's confused about classification. Okay, so if you have read AFM Module A and B, then this question is going to be um, average one. But if you are reading AFM for the first time, you might find it difficult. Okay, so now tell me, which of the following is correct? A, all inventory, you are going to all are inventory, means all these three statements are inventory you are saying. B, 1 and 3 are inventory, 2 is fixed asset. C, only 1 is inventory. D, all are fixed assets. But what is inventory and what is fixed assets? So everyone listen to me very carefully if you are reading this for the first time. See, inventory means all the goods which you are going to use it for your manufacturing. Okay, you're going to use it for daily purpose. Yes, if you're going to use it for daily purpose, because of this you're going to run your business, then that is your inventory. Yes, but on the other hand, fixed assets are going to be not, daily transactions. You are not going to enter in this purchasing, selling in the everyday transaction. But once you have purchased fixed assets, you're going to use it for long term. Okay, through this you will run your business, like in your bank you have computer, that is fixed asset. Yes, but that cash every day which you are getting from the customers, giving to customers, that is what your inventory. Yes, or if you are doing manufacturing, let's say you are manufacturing pen. Yes, so that pen raw material, that pen is going to be your inventory. Take a raw material of pen or pen that is finished in nature, that is going to be inventory. And this machine which you have used for manufacturing this pen, that is going to be fixed assets. So that is the difference between your fixed assets and inventory. So raw material for production, that is going to be your daily purchasing, manufacturing. Yes, correct. So that is going to be inventory. That is going to be what? Inventory. Next, machinery for manufacturing. So machinery every day are you going to purchase? No. So that is going to be fixed assets. You will use it same machine for the long term. Then finished goods for the sale, that is going to be inventory. Yes, so right answer is answer B. 1 and 3 are inventory and 2 is fixed asset. So right answer is answer B. Okay, chaliye, coming to the next one. Which of the following is not a feature of the separate entity concept? Business and owner are treated as separate entities. B. Personal affairs of the owner should not be considered. C. Business should not be dissolved in the near future. Or D. This concept is followed in all types of businesses. So, separate entity concept is again one rule which every business needs to follow. As per this, separate means, two things are different from each other. Yes, entity means company. Entity means what? This means company. So what sort of we want a company that is separated? Separated from whom? Separated from owners. Yes, so this is what we are trying to get. So separate entity means we want different company or that company which is separated or distinguished from the owner. For example, if we talk about Reliance, yes, though everyone knows Ambanis are the owners of this, but always remember whenever you are seeing any bill of Reliance, they are not writing Ambani's name on each and every bill. Why? Because they are following this rule. That is the reason you will see Reliance bill or that shop bill from where you are purchasing, because you are following this rule. Which rule? Separate entity concept. So as per this, which is actually not a feature, we need to identify odd one out. Yes, so business and owners are treated separate entities. This is true. We want false statement, है ना? We want false statement. Then personal affairs of the owner should not be considered. Of course, yes, this is true. Yes, Ambani's, whatever they are doing, personal expenditure, you will not see in your Reliance balance sheet or books because of this concept. Then, business should not be dissolved in the near future. Okay, or this concept is followed in all types of businesses. This is true. Every business, whether you are a small business owner, you are a unicorn business, or you are a top business, whatever sort of business you are running, you need to follow this. So right answer, false statement, is answer C. Yes, answer here is C, because that is not at all, given in separate entity concept. Okay, now coming to next one. Mr. A purchased a machine for 1 lakh. He incurred the following expenses. Okay, everyone, this is very important and this is difficult question. Okay, this type of question you will see in your JIB. Okay, so Mr. A purchased a machine for 1 lakh. He incurred the following expenses. Carriage means transportation. Let's see, here is your Reliance business, okay, and here is a supplier. You purchased one machine, okay, from supplier. So supplier will transport up to the factory of Reliance. Yes, so that transportation expenditure is known as carriage expenditure. Okay, so that is how much? 5,000. Now, import duty. Okay, so let's see, this time supplier is outside India, let's say in USA. Okay. So import duty you pay 10,000. Okay. Then GST 18,000. Input credit not input credit available means whatever tax, whatever GST you have paid, you can take credit of it. Or let's say in simple terms, credit means you can take refund of it. है ना? So remember one thing, if you are able to take the refund, means this is not going to be the part of, not a part of cost. Yes, so here this 18,000 is not going to be the part of cost. But remember, these two things are going to be part of this machine. Now, why we are adding this? Why not just 1 lakh? We can say as your answer. Because for using this machine, these are, compulsory expenditure. These are compulsory expenditure. These are direct expenditure, because without importing or without transporting, how you are going to use in your factory. Yes, so you are going to add 5,000 also in the cost of machine, 10,000 as well in the cost of machine. So right answer is going to be 1,15,000. है ना, 1 lakh 10 and 15. Yes. So answer of this question is answer B. Now, again, I am repeating, say if you are reading this topic for the first time, you might find it difficult. But if you have done one time revision, one time means at least you know the concepts, you can recall this point. है ना? So, what should be the correct cost? That is 1,15,000. If you understood this part, then this question is homework for you. Let's see whether you can solve it or not. Important part is going to be this. Yes, GST 36,000. No input credit available. Means refund is there. Yes or no? No refund is there. Okay. So let's see if refund is not there, then how you are going to deal with this GST. Let me give you one point. If refund is available, ignore it. Hana, no need to add. But not available, if refund is not available, then it will become part of cost. You are going to add in the cost. Okay? So this is the point which you need to remember, and as per this, you need to give me the answer of this question. Again, same question, same pattern, just numbers are different and amounts are different. Okay. Then next, AS9 deals with, okay, this is again very simple question, and yes, AS means accounting standards, and accounting standards in AS very important from exam point of view. Okay, coming to next question now. So, Mr. A businessman, follows accounting principles strictly. He recorded the purchase of a stapler costing 50 rupees as an expense instead of treating it as an asset. Which concept is being applied? Matching concept, materiality concept, going concern, dual aspect concept. See, going concern, materiality, matching. Going concern means your business will run till infinite period. Yes, like every business, if you see, they are going to run for infinite period. Whenever you are starting your own business also, you will not say that after 1 year I will wind up this business, Hana, because your assumption is you will run it for infinite period. Or if I ask you for how many years you are going to run your bank business, can you say any deadline? No, because there is no time of your business, and that bank will run for infinite time. So that is what going concern, that is not the answer. Dual aspect means for every transaction where you have debit and credit, so that is very important. We are not talking about this. Matching concept means all your revenues must be equal to your expenses. Right answer is materiality. Materiality means some transactions are important for you, whereas for some transactions that is not important for me. That depends on the nature of the transaction. For let's say 100 rupees, that is not important for you, है ना? Because you will say "Arey, that is very small amount." But let's say this, if I write it as with double zero, now tell me, this is important. Yes, this will become important. So this is actually depends from situation to situation. Some amounts are important, and for some people, if I ask to Ambanis, this 10,000 is important, so they can say, oh, that is a very small amount, but for us this is going to be very important. So that is what your materiality concept is. So rupees 50 is very nominal amount, very small amount, so we are not writing it under fixed asset. Yes, we will be writing as an expense. That is what materiality concept talks about. First question on your screen. So the question is, which of the following classification is correct? Okay, so basically this question is based on golden rules of accounting. Okay, so before we solve this, let's read the options. A, RAM, asset, machinery, expense, salary, asset. B option, RAM, debtor, machinery, asset, salary, expense. C, RAM, expense, machinery, asset, salary, liability. D, RAM, debtor, machinery, liability, salary, expense. So, if you know the answer, then very good. But if you are not aware about the golden rules of accounting, let me tell you in a very quick manner. Golden rules of accounting. So basically in this we have three different rules. First one is your personal rule. Okay, let me write like this. Okay. So first is your personal rule. Personal rule means when we are talking about individuals like you and me. Yes? And for this personal rule, if you see debit, you see credit. Debit means you are the receiver and credit means you are the giver. Second is your real account. Real means when we are talking about assets. especially fixed assets. Okay, so debit here means what comes in, credit here means what goes out. And lastly, you have that is nominal account. Nominal means all your daily expenses. Okay, let me write over here daily incomes or expenses. So debit, all your expenses and losses. Credit, all your incomes and gains. Okay, so now if you see here RAM, okay, RAM is going to be what? Here asset, daily income and expense or an individual. Of course, RAM is here individual. So RAM is going to be what? Asset? No. Expense? No. So you have now two options, either B or D. Okay. Now coming to the next one, machinery and machinery. Machinery is what? Machinery is an asset. Yes, so this is asset. So what you can do, you can see that D is your wrong answer because here they are saying that machine is your liability. That is totally wrong. And salary, in both the cases they are saying expenses. That is correct. So right answer as per this is going to be answer B. Okay, I hope you got this answer. Now coming to next question. In the transaction purchase machine for 70,000 in cash, which account is credited? So you have option A machine account, B cash account, C rent account, D purchase account. So let's read the transaction. This is your transaction. Okay. Purchase machinery for 70,000 in cash. So what you did, you purchased one machine. Okay. So machine is what? Machine is your asset. Yes or no? Machine is what? Machine is your asset. Now machine is coming in your business. Yes. So what you will be using? You will be using real debit side. Okay. So how to pass journal entry? I am writing over this side. So here you will be writing machine account debit. Yes, 70,000. But in this question they are asking about credit side. Okay. So now while you are purchasing machine, you need to pay something. Yes, either you are paying in cash on immediate basis, cash, bank, whatever it is. Either you are making full payment today, or what you can do, you can make some EMIs. These are the two things through which you can purchase machine. Yes or no? Now here what they are saying, you paid cash immediately. So you purchase machine from one hand. So from the another hand, what you are doing, you are paying for it. You are paying for it. So again here when you are seeing cash, that is an asset as per real account. When cash is going out, that is credit. So here to cash account 70,000. So right answer is going to be which account is credited? That is cash account. Okay, machine is going to be debited. There is no rent transaction, so that is extra thing. This is not a purchase entry. So right answer is again answer B. Okay, chaliye. Coming to next question now, and this is your caselet based question. So let's read it together. Ramesh noticed that his passbook showed a debit of 150 for bank charges related to check book issuance. Sorry. However, this entry was not recorded in his cash book. Okay. So here is one Ramesh. Okay. Now Ramesh is having one bank account. Okay, this is bank account, and Ramesh is also maintaining all the data in his own cash book. Yes, so these are two different books. Now, as per the bank account, as per the bank statement or passbook, there is one debit balance. There is one debit balance of rupees 150. And what is this 150? This is bank charges. This is what? This is bank charges. Yes, because you are using bank services, so bank on quarterly basis they are deducting some charges. Yes, but what is the problem? The problem is, let's say in cash book bank account, take a bank column, let's say balance is 1,000 rupees. But as per your bank statement, your amount is only 850. This is the balance. But in your cash book bank account, that is showing 1,000. Can you see the difference here? Yes, can you see the difference? Yes, you can see that your cash book bank account is not matching with your bank account, with your passbook. Okay. So now the problem is, how to rectify this difference. Yes, how to rectify this difference. So in this case, however, this entry was not recorded in his cash book directly. They are saying that this 150 bank charges are not recorded in Ramesh's book. So what Ramesh will do now? Now Ramesh will debit 150 and this amount is going to be 850. Now you can say both the amounts are equal. Okay? So right answer is going to be what? Debit bank charges account 150. Yes, now why we are doing debit? Because here we are actually writing expense. Yes, and this will be credited to bank account. So basically here to bank, see, right entry is going to be bank charges account debit to bank account because we are reducing bank balance. Okay, so this is your nominal entry. This is your nominal entry because in other options, credit cash no, debit cash no, credit petty expenses no, petty cash no. Right answer is, of course, you are going to do bank charges debit, that is your expense, because and you are going to transfer this in your bank account. So here they have given partly entry. They have given partly entry means they have given only debit side entry. Okay, so you can say that, Arey ma'am, in bank account we will be doing credit now. Of course, that is true, but you need to check what they are writing over here. They are writing bank charges. Hello everyone, these are the two things. Okay, let me tell you, bank charges are different and bank account is different. Okay, bank charges, these are expenses. Okay, these are expenses, whereas bank account is your personal account. Yes, bank charges are expenses, bank account is your personal account. So these two things are different. Now if you have any doubt, any point, please ask me. Yes, any doubt? I hope this point is clear because see, though they are not going to give you direct questions in exam, these type of tricky questions they are preparing nowadays. Okay, chaliye. So that is the reason if you see the options, in options they are writing about this bank charges. Okay, so bank charges here Ramesh will be doing debit, and because bank amount will be reduced, that is going to be credit. Yes, so entry is going to be your bank charges account debit to your bank account. So this is how you need to pass the entry. It's like your salary paid. Okay, like salary is your expense, salary account debit, and you paid through the bank. This is the same entry. Salary and bank charges are an expense, and here you are paying through the bank. I hope you got this answer, and the right answer of this question is then answer A. Okay, chaliye. Now coming to next one. You are the accountant of ABC Limited. As on 31st March, you observe the following balances in the books. Purchase account 2,50,000, sales account 4,00,000, salary account 80,000, rent account 40,000, machinery account 3,00,000, debtors account 1,20,000. Now you are confused about which accounts should be carried forward and which should be transferred to trading and P&L account. Okay, now here you are an accountant of ABC Limited. After seeing the heads, now you are confused like which accounts to be carried forward. Carry forward means these are going to be your real account or personal account, which you are going to show in balance sheet. And in your trading and P&L account, you show only nominal account. Yes. So which of the following accounts will be transferred to trading account? Okay. So tell me, purchases, salary, machinery, debtors. Yes. So machinery and debtors, these are your real and personal. means you will not transfer it into trading account. So let's eliminate C and D. Yes, now you have purchases and salary. Okay. Trading account shows your direct expenses. Okay. Like your purchasing, your opening stock, your closing stock, your sales, turnover, which we say. Yes, so that is what you are showing in trading account, and rest of the expenses you are showing in P&L account. So salary account you will show under P&L account, purchases account you are going to show under trading account. So right answer of this question is answer A. Yes, chaliye. Now coming to the next one. The technique of finding the net balance of an account after considering the totals of the both debits and credits appearing in the account is known as posting, purchase, balancing of an account, the none of the above. So this is your homework question, everyone. Let's see whether you know this answer or not. See, if you're preparing for upcoming May 26, so it is deemed that you have started your preparation. Because nowadays in exam you won't be getting one-liner question, direct questions, fill in the blanks in a very direct manner. No. Yes, they are increasing the level of your JIB paper. So as per that we need to prepare for it. Okay, chaliye. So this is your homework question now. Next one. Which one of the following is not a feature of bank reconciliation statement? Okay, now this question is from your IIBF book. Okay, so again I am giving you homework number 2. You have two homeworks, homework number 1 and homework number 2. Yes, I know this is very easy questions, but let's see whether you can deal with the easy questions or not. Okay, chaliye. Now next question. Again we have case-led question. Rohit, a junior accountant in a trading firm, was preparing a cash book with discount columns for the month of March. While recording transactions, he faced confusion regarding the treatment of discount allowed and discount received. So he recorded the following transactions. Received 9800 from a debtor, allowing him discount of 200. Rohit correctly entered 9800 in the cash column but got confused about whether the discount should be recorded on the debit side or credit side. How the golden rules of accounting apply to discount, he approached his senior for clarification. So you all are your senior and your junior is now confused how to show this 200 in your cash book. I hope everyone got this question. See, if you feel that array these questions are lengthy, why I'm giving you this type of lengthy questions, and you want only plain and simple one-liner questions, then I can say that this sessions are not for you. Okay, these sessions are for those bankers who are seriously planning to clear in this attempt, and these are the levels you can see in your exam. Okay, I can give you one-liner questions in which you will feel confident, you will feel, oh, it's very easy, let's switch to next question, but no. Okay, as per your exam level, now you need to prepare. So if you are finding it that this is not as per your JIB, then of course you can go with the one-liner questions, like very easy 0.5 questions. No worries. Okay, but if you are serious about your attempt, then these sessions are very helpful. Because I have both the options. Now I can give one-liner questions which I can solve in just fraction of seconds. Yes? Chal. But I want that everyone who are watching this session, you are revising your concepts, you are understanding the questions, and you are getting confidence through lengthy paragraphs. Chaliye. So the first point is that we need to discuss about cash book. Acha, in cash book, you have three types of cash book. Hana? That is single column, then double column, and then triple column. Okay. Now the point is, in this double and triple column, are you making any column for discount? Yes. Are you opening any column for discount? Yes or no? Just tell me. Yes or no? Yes or no? What do you think? Are you opening any discount column in your cash book? If you're saying no, then you are wrong. Right answer is yes. We are opening one discount column in it. Okay. Now, in this, whatever you are getting discount. Okay. So, acha, before we proceed further, let's talk about nature of discount. What is the nature of discount? Okay, so discount is what? As per your golden rules of accounting, discount is your real, personal or nominal. So discount is your expense. Okay, and as per expense, you will be using debit. Okay, discount. Acha. One more thing. Discount always you are not giving. There are two things. Yes, there are two things which you need to remember. First, whether you have received the discount or you have allowed the discount. When you will be allowing, you will be allowing to discount to customers. When you will receive, when you are purchasing goods. This is very important. You need to understand this point. When you are purchasing means you are receiving the discount. When you are selling it, you are allowing discount. So when you are allowing discount, that is your expense. That is your expense. And when you are receiving it, that is your gain. That is your gain. That is your income. So as per your golden rules of accounting, discount is which type of nature rule? Nominal. This is what? This is nominal. Okay. So nature of discount is nominal. And there are two cases. First, you can receive discount. Second, you can allow discount. When you are receiving it means you are gaining. When you are allowing it means that is an expense. So expense you show on your debit side. Gains and incomes you show on your credit side. So now we are clear that yes, in your cash book you are going to show discount. That is correct. Now you need to check as per this question whether you have received the discount or you have allowed the discount. So let's read the transaction. He recorded the following transaction. Okay, there is one transaction. Received 9800 from a debtor. And debtor is your customer or that is your supplier? Debtor is equal to customer. Means you are a shopkeeper now. Okay, so let's say here is your shop and here is your debtor. Okay, so here you sold goods. Let's say these are the goods and you said okay, your total bill is equal to 10,000, but we are giving you discount of 200 and you need to pay only 9,800. So this is the cash which you shopkeeper will be receiving, 9,800. So how to treat this? Are you allowing this or are you receiving this discount? Hello shopkeepers, you all are here shopkeepers. So tell me, as a shopkeeper, hello, you are this, you are here. Don't consider yourself as your customer. No. Now you are a business owner. Okay, so as a business owner, when you are giving discount, that is loss for you or that is gain for you? That is receiving for you or that is allowing for you? This 200 is going to be an expense for you because you have allowed this. So on which side you will show it? On debit side or on credit side as per this chart? Very good. On debit side. Okay, so now let's read the question. So where should the discount of 200 allowed to debtor be recorded in the cash book? Tell me. Credit side, discount column, debit side, discount column, credit side, cash column, credit side, debit side, cash column. So you will be using discount column. See again, when you prepare cash book now, that is in T-shaped nature. Okay, you have here cash column, discount column, then you have cash column, discount. Sorry, let me make it properly. This is your cash book. Okay, T-shaped cash book you have. This side is your discount on both the sides, because this is your debit side, this is your credit side. Here you have cash book, cash column. Here you have cash column. Okay, so when you are allowing discount, you are using this. You are going to use this. When you allow discount, okay, when you receive discount, you will show on the credit side. Now tell me, under your cash book, are you going to use cash column? No, you are going to write here. Okay, so this is going to be credit side discount column. No, right answer is answer B, debit side. Arey ma'am, but in exam we don't have this much time to solve like this. No, so in exam why you will be making this many things? I am explaining to you right now. That is the reason I am giving this many points and I am telling you. And in exam, of course, you will be reading this question directly and you can say that right answer is answer B. But how you can do it when you are practicing it, when you are remembering your concepts. Okay. So First question is, trial balance is used to check the accuracy of what? A. Balance sheet balances. B. Ledger accounts balances. C. Cash flow statement balances. D. Income statement balances. So basically, when we talk about accounts, first we start with journal entry. Yes, because without journal, you cannot prepare your accounts. So journal is the first step. From that, you prepare ledger. From those classification that you have done in ledger, you are going to prepare your trial balance. Yes, so basically under trial balance, what is our agenda? Our agenda is to see arithmetical accuracy. Yes, arithmetical accuracy, which says whether debit is equal to credit or not. Debit means, as per your golden rules of accounting, I hope you have watched our previous sessions, because as per golden rules of accounting, debit is changing each and every time as per the nature. Credit is changing as per their nature. So do remember, when you are writing debit, when you are writing credit. So why we are using trial balance? So that we can check the accuracy. That balance sheet balances? No, because based on trial balance you prepare final accounts. I hope you remember this. Yes, under final accounts we see P&L as well as balance sheet. Yes, so that is a sub part of final accounts. So balance sheet is not your answer. Then cash flow statements? No. Now when we say final accounts, in which we prepare two things, P&L and balance sheet, we have one more thing, which is financial statements. Yes, so as per this financial statements, we prepare different statements, like A, again balance sheet, B, P&L account, C, cash flow statement, D, SOKI, and E, that is explanatory notes. So as per your company's account schedule 3, you need to prepare these many different statements. Yes, so cash flow is not your answer. Then income statement balances? No. Here, if you are a businessman, like you are a Reliance company, then you are going to prepare P&L account, because your agenda is to earn profit. But suppose if you are starting NGO, in NGO also you are earning income, expenses, then in that case you are going to prepare income statement balances. Yes, that is income and expenditure, revenue and expenditure, like that. So right answer of this question is answered B. Yes, I hope you know this point. Now coming to next question. When credit balance is equal to debit balances, the trial balance check and shows dash. It also indicates that there were no errors made during the posting and recording and posting. Yes. So there are now four options. You need to fill this blank. A. Understatements of balances. B. Errors of commission. C. Arithmetic accuracy. D. Omission of economic events. See, omission means there is no entry. Hana, you have forgotten to record that entry. Yes, so that is what omission. Correct. So here what they are saying, that when credit balance is equal to debit balance, they are saying the same thing. When debit is equal to credit. Hana, just to make your question difficult, to test your concepts, they are writing credit balance is equal to debit balances. So the trial balance check and shows what? It also indicates that there were no errors. Hana, as per your trial balance, we are checking what? We are checking arithmetic accuracy. That whatever transactions, whatever entries you have passed in your journal and then ledger, all these entries are correctly posted. Yes, correctly posted in your ledger. Then only you can prepare your final accounts, based on which you will be calculating profits and losses, or based on that you will be calculating your position of business. Yes, so these are few points which you need to remember. So right answer of this question is answer C. Very easy question. Yes, I can say that. Chaliye, coming to next one. Now, which of the following account with normal balance is shown at the debit side of a trial balance? Okay, so if you don't know about trial balance, so let me tell you, under this trial balance, we need to follow one rule. Okay. First thing I am asking to everyone, that if you're reading this trial balance for the first time, I hope you understood the definition. Why we are preparing this trial balance? So that we can match debit equal to credit to check arithmetic accuracy. Yes or no? But when we are talking about this trial balance statement, yes, so this is the format which we prepare for trial balance. Okay, here we are writing particulars. Then we have debit side, we have credit side. So all the balances of each transaction, yes, we are going to write here. Yes, we will be opening different accounts under ledger. So in that ledger, whatever accounts we have opened, their final balances we will show either on debit side or credit side. Yes, so for that debit side or credit side, what I'm saying, you can pass those entries either on debit side or on credit side. You cannot pass the same transaction entry on both the sides. Okay, so when we are passing as per net trial balance, here you are going to pass either on debit side or credit side. Okay, so for that we need to follow one rule, and that rule says AE. Yes, LIC. Okay, just I hope video is visible. Chali. So AE. A means here assets. E means expenses. L means liability. I means income. C means capital. Okay. So we will be making here two groups. First group will include assets and expenses. Second group, liabilities, income, capital. Achha, what are assets? Let me give you quickly one example like machine. Okay, expenses, salary paid. Liability, loan, bank loan that you have taken. Income, yes, like commission received. Okay, capital, owner investment, owner's investment. Okay, that can be in the form of cash or that can be in the form of assets. Okay, so now here we need to follow rules. Generally, assets and expenses, AE, generally they have debit balance. Which type of balance? Debit balance. Or if you want to increase AE balance, you will be using debit side. Okay, this is one rule. This is same rule you need to follow for these two transactions, that is assets or expenses. Now if you see next side, that is LIC, generally their balance is going to show you credit balance. Okay, generally they will show credit balance. Generally E will show debit balance. If you want to increase this balances, debit side. LIC balance, if you want to increase, credit side. Generally which balance? Credit balance. So this is what they're asking now. So which of the following account with normal balance is shown at the debit side of the trial balance? So as per this rule, tell me, which group will give debit balance? Of course, assets or expenses. Hana? Creditors? Yes, creditors. They are assets? No. They are expenses? Creditors? Assets or expenses? No. Not right answer. Suppliers? Again assets? Here expenses? No. Rent income account? Assets? Expenses? No. Rent income is your this I. Yes, so this is not your answer. Right answer is cash account. So right answer of this question is answer D. Yes, I hope you got this point. Sorry. See, again I'm repeating, if you're reading this for the first time, of course you will be finding this topic difficult. So I request you that please first understand the concepts, because we are not going through in-depth concepts. As per requirement of the question, we are discussing the concepts. That's it. Okay. Now coming to next question. Now if the trial balance does not tally after many efforts, then the dash account is opened. You know what? Now whenever you are preparing trial balance, yes, there is one point you need to remember. Who will prepare trial balance? Yes, we. Correct? Individuals or machines. Now, of course, when we are preparing or machines are preparing, softwares are preparing, mistakes are common now. We are humans and humans are allowed to make mistakes. Yes, so here whenever you see trial balance, so general format is what general format says, that always debit is going to be equal to credit. But as humans are involved and we are allowed to make mistakes, yes, so let's say there is one mistake. Okay, there is one mistake. There is one mistake. Acha, what sort of mistake? Let me tell you. Let's say here you have assets 10,000. Okay, you have salary paid, let's say 1,000. Then you have cash 2,000. Okay, then you have capital. Yes, so this is your 13,000. This is your debit side, this is your credit side. What you can say right now, that yes, our debit side is equal to credit side. This equation is satisfied. And debit is equal to credit side. This uh, you can say statement is satisfied. Yes, but now let's see the mistake. Let's use the same format. Okay, let's use the same format. Now you have assets, you have shown assets, your accountant has shown these assets, salary paid, okay, 1,000, and directly he showed capital. Yes, now on your debit side you have only 11,000, on your credit side you have 13,000. So this time your debit is equal to credit. Is this statement, is this equation satisfied? The answer is no. Hana, this time this statement, this equation is not satisfied. Yes, means there is some mistake. And you know there is one problem. What problem? That every year on 31st March we need to close our book. Hana, whether we see bank, any company, any business, they need to close their book on 31st March. As per which concept? As per accounting period concept. Okay, as per this concept, you need to close on 31st March. Yes. Now the problem is there is difference. By 2000, our debit is not equal to credit this time, and we need to close. We need to submit our documents to RBI, to different regulatory bodies. Now, how to tackle this situation? So whenever there is any difference, what generally accountants are doing? Yes, what generally accountants are doing, they are opening one temporary account, and that account is known as suspense account. That account is known as suspense account. Okay, so if the trial balance does not tally after many efforts, yes, like in this case, there is one mistake, but we are not able to identify till 31st March. We need to close our books because that is our closing period. Then, to actually adjust for the temporary period, we will be opening purchase account. No. Sales account? No. Right answer is suspense account. That is temporary account. So right answer is answer B. I hope everyone got this point, that why we are opening this suspense account. What is the meaning of the suspense account? Yes, so suspense account is your temporary account which you are opening, yes, to adjust your temporary mistakes. This is not you're going to keep for longer period of time. Yes, the suspense account can be used for debit side as well as for credit side, just to settle for temporary period. Correct? So that is what your answer B. Yes, now this is not always sure that this is going to be a mistake. This is might be because of errors. Yes, like omission. Yes, or double entry, like that. Okay, like that thing is there. Chaliye, so this is about one more question. Next. If wages paid for the installation of new machinery is debited to the wages account, it is in what? Option A, error of commission. B, error of principal. C, compensating error. D, error of omission. So basically, errors means there is one mistake, and now when we talk about mistakes, we have four different types of mistake. Okay. So first is error of commission, error of principal, compensating error, and omission. Omission means there is no entry. Okay. You have forgotten to record that entry. Yes, principal means Acha, before principal, let's talk about commission. Commission means here wrong amount, wrong side. Okay, that is what commission. Compensating error means one mistake nullifies other mistake. Okay, principal means your concepts are not clear. Okay, now let's say here this machine is your AC. Let's take one example. This is AC. Okay, this is your air conditioner. This is your AC. Okay, you purchased AC for, let's say, rupees 50,000. Okay, but this is the purchasing amount. Now you will actually pay transportation as well. है ना? Why transportation? Array purchase means that AC is already in, suppliers go down, but now you will transport it to your house also, no? Okay, so transportation you paid, let's say 5,000. Okay, now after transportation, what you will be doing? Can you start that AC? No, we need to install it now. Yes, without installing, how you can use it? Correct. So now you are paying installation expenses. Let's say this is your installation expenses, that is 6,000. Yes, without installing, how you can use it? Without transporting from suppliers till your home, how you can use it? First you need to transport it, though you purchase it, but can you use it? No. So you need to transport it from supplier to your home, then you need to install it. Yes, then only you can use it. So these are the expenses you need to keep, or you need to give to start that AC. Okay, so basically as per accounting, all the direct expenses which you need to incur to get that asset ready. Yes, with the help of all these expenses, you are making your asset ready to use. So all the expenses that you are incurring to ready your asset, you will add in the cost of that asset. Okay, all the expenses that you are incurring to make your asset that so that you can use it. So whatever expenses you're incurring, you need to add in that machine, in that asset only. So right answer is, if I ask about what is the cost of AC, that is not only 50,000, that is going to be 55 plus 6 means right answer is, as per accounts, that is 61,000. You need to incur 61,000 for using this AC, not only 50,000. But what they're saying, wages paid. Yes, you have paid installation expenses, but as you were not aware about this concept, you have shown only 55,000 as cost, and 6,000 you have shown, general wages that you are paying to other labors. Is this right thing? No. Correct? Means our concept is not clear. Yes? So when our concept is not clear, we classify it under error of principle. So right answer of this question is answer B. Yes? Chaliye. Next. Which of the following is not an error of principle? Okay, now this is a homework question. Let's see whether you can solve it or not. Okay. Please share your answer through the comments. Now, which of the following is prepared on the basis of trial balance? Okay, this is again your homework question. So today again I'm giving you two homework questions. This is one, this is two. Okay, chaliye, easy one. Now, next question. 2000 received from Ram was wrongly posted to Sham's account. What is the rectification entry? Yes, rectification entry from trial balance, that is very important. So let's understand this. So what is your correct entry? This is your wrong entry, and this is your rectification entry. Yes. correct entry that you need to pass here, that is, just read up to this point. 2000 received from Ram. Okay, so you have received cash account debit to Ram. That is 2000, 2000. But you were confused that who paid this 2000? Okay, so you have shown this as to Sham. This is the mistake you have made. Now, here, first you need to check, is there any mistake on your debit side? No, debit side is correct. Hana? We need to show cash account, we are showing cash account. But the mistake is on our credit side. Yes, we need to show Ram on credit side. So let's pass rectification entry to Ram. Yes, and when we need to rectify or when we need to cancel it, because here Sham is some extra thing, we need to cancel it. So just reverse your entry. Yes, so that is Sham. 2000 Ram, Sham debit 2000 to Ram 2000. So right answer is answer A. So first of all, let me tell you, if you are joining for the first time, so nowadays in JIB you won't find any direct questions. Yes, now pattern has been changed. Especially they are asking case-led pattern, conceptual based question. So one of the pattern I'm using right now. So this is case-led pattern. Yes, so let's start this question together. So Neha, an accountant in a manufacturing firm, recorded the following transactions during the year. Now there are three transactions as you can see. Number one, purchase of plant 50,000. Number two, purchase of a wall clock 500. Number three, purchase of machinery 2 lakhs. Now she was confused about classifying these expenses into revenue and capital expenditure. Now especially regarding the materiality concept. Now first of all, we need to understand what is the meaning of revenue and capital. So let's discuss that thing first. So revenue expenditure means all your daily expenditure. Yes, whereas capital expenditure you will enter once a time. Okay, not on daily basis. Once you are going to enter it and you are going to take the benefit throughout the year. Correct. Now this revenue expenditure, these are in short term nature you can say. Yes, whereas here capital expenditure, they are going to give you long term benefit. For example, when you're purchasing machine, yes, for example, when you purchase, let's say, a laptop, when you purchased plant, building, land. On the other hand, revenue means on daily basis whatever expenditure you are incurring. For example, you are paying salary. Yes, that is one example. You are paying rent. You need to incur on daily basis. Daily basis doesn't mean today and tomorrow, then after that day, that is what daily. No, on monthly basis, if you are incurring also, then that is revenue expenditure. Yes, I hope this point is clear. Now, next thing we need to discuss, that is materiality concept. Now, this is very interesting concept because there is no proper definition of it. Like for you cannot say that this is the standard format for every business. No. Why? Let's take one example based on it. Suppose, let's say I am owner of one toy shop. Okay. So here is my toy shop, and on the other hand, let's say Hamleys. Yes, this is owned by Ambani's. Correct. Now the point is, yes, there are two toy shops. One, I am the owner. Second one, Ambani's are owner. Now the point is, let's say there is loss. Correct? Loss of equal to, let's say, 20,000 rupees. Yes, and if you see my, let's say, turnover during the financial year, that is only up to 1 lakh. Turnover, sales, that is only up to 1 lakh. Now there is loss. Okay. in my company, in my toy shop, as well as in this Ambani's Hamlet toy shop. Now tell me, which company will be affected by this loss? Both the companies? No. Of course, my toy shop. Why? Because as you can see, my business turnover is very small. है ना? On the other hand, Hamleys, their turnover is like, let's say in 1 lakh crores. है ना? Let's say 50 crores. So that is very huge amount. So for them, their loss of 2000 is of not that much. Correct? So this is the point where one business is affected by it. On the other hand, one business is not. Because of which concept? Because of materiality concept. 10,000, 20,000, that is very important for my business because my business is very small. On the other hand, for Ambani's, even 20,000 loss is not that much. Correct? Based on which concept? Materiality concept. Yes. Let's say suppose um, if um, if you lose, let's say 5 rupees, are you going to make a very big issue of it? No. But let's say if you are losing 5,000 rupees, of course you will make big issue because that is important for us. Yes, so that depends from nature to nature. That depends from business to business. How much amount is important for us and how much we can skip. Yes, so that is what materiality. So in this question, we have two concepts. Yes, first, your revenue and capital expenditure concept. Second, materiality concept. Now, let's read the question. So the question is, the purchase of a wall clock for 500 is treated as what? Capital expenditure only, revenue expenditure due to materiality, deferred expenditure, or the liability. Now, if you see wall clock, okay, if you see wall clock, are you going to purchase on daily basis? Of course, no. है ना? Not at all you are going to purchase on daily basis. Once you will purchase it and you will use it for the lifetime. Yes? Or hardly you will purchase in your whole life, let's say 5 or 6 wall clocks or not more than that. Agree? So here you can say, ma'am, as per this wall clock nature and wall clock usage, of course, we are going to classify it as capital. Yes, we are going to classify it as capital. And next thing, if you see 500 compared to this expenses like 50,000 and 2 lakh, of course, plant, wall clock, machinery, all these expenses are going to be capital expenses. Of course, these are going to be capital expenditure. But compared to this amounts like 50,000, 2 lakhs, are you going to classify this 500 as well capital? No. Why? Because compared to this expenses, 50,000, 2 lakhs, 500 is a very small amount. Yes. So that is not going to affect your decision making, your decision power. Not at all. So this 500 which you are incurring for wall purchasing, that is going to be your revenue expenditure. Yes. So right answer of this question is going to be answer B. Yes, chali. Now coming to next question. Sagar is electronic seller. Now, which is a revenue receipt? Now, there are 4 options you have on your screen. Now, I hope this point is clear that what is the meaning of revenue? Revenue means short term. Whatever expenses, whatever incomes you are generating in short term, that is going to be revenue. Means on daily basis, you need to incur this. On daily basis, you need to incur this. Okay? Receipts means here income, or you can say cash inflow. Yes, like expenditure here means expenses, expenditure means outflow. Yes, so that is the difference. Remember this point. Now, you have 4 options and you need to identify which is a revenue receipt. A. Sale of bulb displayed for sale in showroom. B. Sale of old office table used by cashier. C. Additional capital introduced to open a new furniture showroom. D. Mid-term loan from the bank for working capital purpose. Now, see, there are 4 options. Let's start with the D one. D, here you are creating liability. Hana, you are taking loan. And generally, when we say liability, when we are taking loan, that is going to be your long term. Yes, so that is not your short term. So right answer is not going to be answer D. Then additional capital introduced to open a new furniture showroom. So here, are you going to open new showrooms, new business on daily basis if you are a owner of any one particular business? Let's say you are a Sagar. Now, if you are a Sagar, now every day are you going to open that showroom like furniture, then day after tomorrow car showroom, then day after tomorrow means you will be purchasing, let's say, some other plant machinery. Are you going to incur these many capital expenditures or receipts on daily expenses? No. Yes, so here, this additional capital which you have introduced to open a new furniture, that is again capital in nature, will not incur on daily basis. Yes, so right answer is again not C. Now, let's read your B option. Sale of old office table used by cashier. Now, whatever table you are using, let's say in your factory there is one counter of cashier, and he is using one table. Now that cashier is going to purchase, or are you going to purchase table on daily basis? No, you will purchase it once and you will use it for lifetime. Not lifetime, let's say for 5 years, for 6 years. Correct? So that is again you are not repetitive daily income or expenditure. So this is not your answer. Basically here revenue is going to be sale of bulb displayed for sale in showroom, because you are an electronic seller. Of course on daily basis when you are going to sell bulb, you will generate income, and that daily income, that daily cash inflow is going to be revenue receipt. So right answer of this question is answer A. Yes, I hope this point is clear. Chali, coming to next one. Ravi runs a small bakery. Now during the year he earned 4,000 rupees from selling cakes and 30,000 from selling his old oven used in the business. Now how should these receipts be classified? A, 34,000 revenue receipt. B, 4,000 capital receipt, 30,000 revenue receipt. C, 30,000 capital receipt, 4,000 revenue receipt. D, 34,000 capital receipt. Now here Ravi is there. Okay, Ravi is doing which type of business? Bakery business. Correct? Now tell me, on daily basis, what he will be doing? There are two things. Daily basis, that is going to be revenue in nature. Yes. And let's say you will be incurring once. Okay. That is going to be your capital. Now tell me, daily, what Ravi will be doing? On daily basis, Ravi will sell all old ovens, all utensils what he purchased for baking? Of course, no. Yes, so that is going to be, yes, oven, old oven or new oven, whatever it is going to be in capital in nature. But on the other hand, on daily basis, of course, Ravi is going to sell cakes, है that cookies, cakes, chocolates, pastries, whatever. So that is going to be daily revenue. So here, cakes are going to be daily in nature. So that is going to be revenue in nature. And oven that is selling right now, that will generate capital receipt. So tell me, which is right answer? Total 34,000, are you going to classify in revenue? No. Here, cakes will show 4,000 and oven you will see for 30,000. Yes, then so A is not your right answer. 4,000 capital, no. Right answer is answer C. Yes, right answer of this question is going to be answer C. Chali. Now, coming to next question. Which of the following is a capital receipt? Now, this is your homework question. Now, I am assuming that now you know this answer. So, let's see. Take it. Next question. Match the following. So, you have two columns. Column A shows drawer, accepted, payee, drawee, and payee same. Yes, column B shows person who accepts the bill, second person who makes the order, C person to whom payment is to be made, fourth possible in certain cases. Okay, take it. Now, this question is based on which topic? This question is based on bills of exchange. Take it. So, this question is now based on bills of exchange. Basically, under bills of exchange, you have three parties. Achha, but why we are using bills of exchange? Because we are entering into credit transactions. Yes. Why we are entering into bill of exchange? Because we are entering into credit transactions. Credit transactions in Hindi we say udhar. है ना? In udhari ka transaction. So that is what credit transaction. Now the problem is, though here we have supplier. Okay, let's say here is supplier. On the other hand, here is buyer. Okay. Now supplier, let's say, sells the goods for 10,000. Yes. But buyer said, I will make the payment after 1 month. In this case, when supplier is in doubt, oh, after 1 month, buyer is saying to make the payment. But what if he denies after 1 month? What if he becomes bankrupt after 1 month? What if he says there was no transaction before 1 month? So to make this transaction secure, to make this transaction legally, okay, you are preparing one proof. You are preparing one proof, and that proof is going to be your bills of exchange. Okay, that is the scenario. And for this scenario, we have three parties. Yes, number one, we have drawer. Yes, so here that supplier, or you can say who prepares the bill, that is drawer. Second is your drawee. Okay, drawee who accepts the bill, that yes, here buyer will say yes, I am accepting the bill, that I will make the payment after 1 month. This is known as acceptor. Okay. And third is your pay. Yes, third party is your pay party. Pay means person who receives the amount. Yes, so these are the three parties. So drawer, who will become drawer? Drawer, person who accepts the bill? No, person who makes the bill. So A2. Yes, so let's eliminate options now. A2 is your right answer here. A2. Acceptor. Acceptor, the person who accepts the bill. So B1. Okay, so again we have option A. Yes, okay. So here C, again we can eliminate third person to whom we payment is to be made. No, that is not the answer. Pay is the third one. Pay says person to whom payment is to be made. Yes, so third B and D4. Sometimes drawer and pay both are same. This is possible in certain cases. Yes, so right answer is answer A here. Answer A. Yes, chali. Next, in case of dishonor, dash must be noted and protested. Okay, so again this question is your homework question. Okay, so this is your homework too for today. So dishonor means when buyer denies of on due date, when your you can say drawee denies on due date. Okay, so here drawer gets one right to actually file case against that drawee. What is happening here? Let me explain. Here is your drawer. Hana, in simple terms, remember this is your supplier. Okay, but we are not going to use supplier every time. Then on the other hand, you have your drawee. Okay, and drawee is your buyer. Drawer supplied the goods, let's say for rupees 1 lakh. And drawee promised, accepted that yes, to the bill of exchange, I will make the payment after 1 month. Okay. Now the problem is after 1 month, that is going to be due date, means on due date here drawee refuses for the payment, then in that case drawer can take this bill of exchange to the court. That court, listen, this drawer said that he will make the payment after 1 month, and today is that 1 month final due date, but today he's saying he will not make the payment. So court, please file court case against this person. Means basically you can take some legal action based on bill of exchange, and that is what noted and protested. Okay, so in which case you can do it? Of course, now you know the answer. Okay, not in case of promissory notes, not in case of checks, of course in case of bills of exchange. Yes, and so this is the explanation of this question. Chaliye. Now next question, and this is of course difficult question and lengthy question, because now here we are going to talk about, you know, term of a bill. Basically we are going to calculate due dates. Okay, so let's read the question. You are a credit officer at a bank reviewing several bills of exchange presented for discounting. Now the following bills require their correct final maturity dates. Now what you need to calculate? You need to calculate final date on which you will be receiving the amount. Now you have three different cases: bill A, bill B and bill C. Okay, a bill dated August 15, okay, payable 3 months after that. A bill dated January 31st, leap year, payable after 1 month. Bill C, a bill dated September 10, 23, payable 30 days after that. Note, a major public holiday, Gandhi Jayanti, falls on 2nd October. Okay. Now you are asked to apply the rules shown in the standard determination of due dates table. For this calculation, assume the following. Standard days of 3 grace days are added after the initial due date. Public holidays are known in advance. The bank is closed on Sundays and all calculated holidays. Chaliye, so where's the question? Question is here. This is means finally you need to select here. Okay, so this is one lengthy question, and here are your options. So let's start with the first thing. Achha, first let me tell you how to calculate dates. Remember, for calculation, okay, let's say here you have prepared bill of exchange for 1 month. Yes, so how you will be calculating here maturity date? For the maturity date, you won't say just after 1 month. No, always add 3 days of grace period. Hana? This is compulsory thing which you need to do. Yes, so remember this point. Always you need to add 3 days of grace period. Achha, one more point let me tell you. Okay, this is the first point. Second point is, if maturity date falls on public holiday, means you know that on 2nd October Gandhi Jayanti is there, Hana? Every year. That is nothing new thing. So you will take maturity date your previous day. Yes, first you need to calculate maturity date. How you will be calculating? Whatever month or whatever time, okay, you have given on bill of exchange, always add 3 days of grace period. Now if suppose maturity date falls on public holiday, then you will be taking maturity day as your previous day. Or third case is, if maturity day falls on emergency holiday. Yes, then you will take maturity date as your next working day. Yes, so these are the 3 points which you need to remember. Okay, now let's solve our 3 situations. First, bill A. Okay, so here we have first bill A. So what they're saying that a bill dated 15th August 2023 payable 3 months after due date. ठीक है. So you have drawn the bill on 15th August 2023 for 3 months. But 15 August is public holiday. That is not at all issue. Hana, that is not our issue. Our issue is if maturity date falls on public holiday. You can prepare this bill on any day. Hana, that is not at all an issue. So how to calculate maturity date? First add 3 months from it. So 15th September 1 month, then 15th October second month, then 15th November is your third month. है ना? This is how you will be calculating. Wait, let me draw this thing. Not here. Here. Okay. So from 15th August, you will be taking 15th September, 1 month, then 15th September, October, second month, and then 15th November, third month. है ना? So 15th November, but always take 3 days of grace period. That is compulsory. So 15, 16, 17, 18. So 18th November 23. That is your maturity date. Now 18th November is not falling on any public holiday. And if they are not giving anything, then don't assume it by your own. And there is no emergency also. So final answer of first bill is going to be 18th. So you can say B is wrong answer, D is wrong answer. Okay, so you have now two options, A and C. Let's see the B one. In B bill, a bill dated 31st January, leap year, payable after 1 month. ठीक है. Second, 31st bill B, 31st January for 1 month. Yes, and what they're saying that this year is your leap year. Always remember when you are calculating month wise, है ना, not day wise, when you are calculating month wise, to take directly if on 31st January, then take last date of next month. So last date of next month is going to be 29th February. है ना? So this is going to be maturity date plus 3 grace days. So 1, 2, and 3. 3rd March 24, I think. Huh. So, oh, here also we have 3rd March, 3rd March. Okay, again it's a tie. Let's see the third bill. A bill dated 10th September 23 payable 30 days after date. Acha. Now, in case, what was the date? 10th September 23 for 30 days. In case when they are giving you, day wise time period, then calculate like 1 day, 2 day, 3 day. 100 day wise we need to calculate. So here maturity date is going to be 30 days we need to count from 10th September. So ignore 10th September. Then you have 11, 12, 13, 14 till 20. You have 10 days. Then from 21 till 30 you have a total, you have now 20 days and plus 10 days of October. Yes, so 10 October plus 3 days. Always we need to add this. So 13th October is your final answer. Question number 1 on your screen. The two types of cash vouchers include debit vouchers and dash vouchers. Option A, credit, memo, receipt, payments. Now, this question is especially based on bank. Yes, now when we talk about bank, there are different vouchers. See, generally when we talk about any business, accounting, generally we have seen for businesses. So we say we will be making first journal, then followed by ledger, then trial balance, and then final accounts. Yes, but for the banks, this is quite different because in banks you will start with ledger. Okay, so how you will be posting in ledgers? You required some proof. Yes, how you are posting in journal? You required some proof, and that proof is your bill. Yes, different types of bills, invoices. Yes or no? That is the proof of a transaction. Same in the bank, you require some proofs, some sort of legal document, and that legal document, that proof is given by vouchers. Vouchers are the proof that yes, this transaction has been done. Now, there are different types of vouchers also. We have that is cash voucher, and second one is credit voucher. Yes, cash and credit voucher. Now, cash voucher means when cash flow is there. In simple terms, है ना? Like a bill, we have vouchers in bank. Cash means when cash inflow outflow is there. Credit means there is no inflow outflow transaction is there. So basically, first we have cash vouchers in which you have inflow and outflow. Next, we have credit vouchers in which we don't have any cash flow transactions. Sorry. Now, under this cash voucher, again we have two different types of vouchers, that is debit voucher and credit voucher. Okay, so this question is based on this particular topic, that is the types of cash vouchers. So there are two types of cash vouchers that include debit and credit. So right answer is your answer A. Yes, here right answer is your answer A. Chaliye, now coming to next question. A voucher that is used to record cash transactions is called a dash. Journal voucher, credit voucher, cash voucher, transfer voucher. Now, how many types of voucher we have? Just we discussed now. We have two types of voucher, that is cash and credit voucher. Here, when we say cash, basically we have cash flows. We have cash flows, correct? And for that we use debit or credit voucher, correct? But now the question is asking the voucher that is used to record cash transactions is called journal voucher, no, credit voucher. And this credit voucher we never record any cash transactions. Then transfer voucher, no. Right answer is answer C, correct? Chaliye, coming to the next question now. Which voucher is used to document payments made by the bank? You have receipt voucher, debit voucher, transfer voucher, or contra voucher. See, here receipt voucher is not used. Generally, we use debit voucher or credit voucher. Now, what they are saying here, you are going to use one voucher to document payments made by the bank. So, whatever banks are doing the payment, yes, in which bank is showing outflow, they are going to use debit voucher. Yes, you have credit voucher. Credit vouchers are used for inflow of cash, but debit vouchers are used for outflow of cash. As you can see here, voucher is used to document payments made by the bank. Yes, in this payment is made by the bank, so bank will be using debit vouchers. Right answer is answer B. Then, which one of the following functions in a bank is normally not performed by the back office? Now, when we talk about banks, okay, so generally we have two different offices. One is front office, another one is back office. Front office means you are interacting directly with your customers. Yes, like you all are interacting directly with the customers, then you are sitting in front office. Yes, in front office you are directly dealing with the customers, like deposit, loan sanctioning, FD, you are guiding them basically. But on the other hand, one more department you have, that is back office. Now, back office, they are not interacting directly with the customers, but they are the backbone of bank. Without them, you cannot function, you cannot run your bank. Yes, so if you are if you are working in a bank, yes, especially in, let's say, HO, yes, that is head of office, or local office of the bank. If you are working in that, yes, so you are working in back office, where you are calculating interest payments, you are checking KYCs, you are maintaining IT, you are maintaining audit. Yes, you are working for the accounts, taxation. If you are working in this field, yes, in back office, then you are sitting in the back office. Yes, so now this question is based on that only. Which one of the following functions in a bank is normally not performed by the back office? So, A. Reminders for renewals of term deposit, deposit of cash by the customers at the cash counter, calculation and posting of interest and loan accounts, maintenance of journal ledger and other books of accounts. So, now if you see directly, answer B is right. Yes, because customers are not at all coming in back office. Yes, they are coming at the cash counter and depositing there. Yes, so right answer of course of this question is answer B. But rest of the functions are performed by back office. Whatever FD term deposit you are creating in a bank, back office is going to calculate it. Yes, all the norms of RBI banking regulation act, they are applying it. Yes, whenever there is a change in repo rate and interest rate, here this back office employees are adjusting those uh, terms. Okay, when to renew, when to deposit, your due dates, your calling, your posting, everything, general ledger, accounts, everything is maintained by back office. So right answer of this question is answer B. Then next question, which one of the following transactions does not result in inter-office debit or credit entry? So now here you have four options. A. Advance to a staff member by debit to suspense account. B. Payment of travelers checks issued by other branches. C. Receipts from other branches of the proceeds of instruments sent for collection. Or D. Issue of drafts. Now basically this question is asking that out of these four options, which is the transaction that will not at all going to result in inter-office debit or credit entry? Inter-office means you have two banks, you have your inter-office transactions. Yes, sometimes we are taking help from our branches as well, no? So out of these four options, which is the option which will not be the part of inter-office debit or credit entry? So right answer is going to be answer B. Payment of traveler's check issued by other branches. Whenever you are giving advance to your staff members, you are going to record in your inter-office debit credit transactions. Yes, if you are issuing any drafts, of course you will record. Then any receipts from other branches of the proceeds of instruments sent for collection, you will record in inter-office debit credit entries. But here payments of traveler checks issued by the other branches, you are not going to record in your inter-office debit credit entries. So right answer of this question is answer D. Now, next question. The problem about reconciliation at the branch level, which has not been resolved by the computerization, is that of dash. Saving bank accounts, current accounts, draft issues, or suspense and sundry deposit accounts. Now, the point of this question is, earlier bank used to work manually. Yes, humans were involved for entries, for recording, for each and everything. But after computerization, now you have your own softwares. Yes, you have your own softwares. Now, in this case, are you using your own manual power or IT power? Now you're using IT power for each and every transaction. Though you have implemented IT, though you have implemented softwares in your offices, but now also there is one problem which is not at all resolved by implementing of software. That is your suspense and sundry deposit accounts. Because suspense and sundry deposit accounts we are creating for temporary basis. Okay, whenever our entries are not matching, because ultimately when you are doing accounting, whether in bank, whether in businesses, you need to show debit equal to credit. And if it is not matching, for the temporary purpose, you can use suspense account. Yes, to rectify, to actually settle those differences. Yes, other you can say transactions like related to saving bank account, current accounts, draft issued accounts, all these transactions can be easily done through your, you can say, bank accounts, but you cannot pass even single entry, without, you can say, without making any errors, though you are using softwares, but that doesn't mean that now also you're not making any errors. So if there is any differences, any errors, then of course you need to create suspense and sundry deposits. So this is the drawback, which is even after implementation of softwares has not been dissolved. So that is, you can say, drawback of this software or this computerization. So right answer of this question is answer D. I hope this point is clear. Then, which of the following are the typical and most common types of errors observed in inter-office accounts? Now, recording of particulars in incorrect fields. B. Double recording of the same transactions. C. Posting of transactions in incorrect office accounts. Or D. All of the above. Now, here you need to identify which of the following is the most common, you can say, errors observed in interoffice. So, all of the above is your right answer, whether that is recording of particulars in incorrect field you are choosing, or you are recording double recordings of the same transactions. Yes, might be I'm also posting the same transaction, you are also posting the same transaction, we are recording in incorrect field. Yes, entry is debit, but we are recording on credit side. Posting of transactions in incorrect office accounts. Yes, office is related to, let's say, debit, and we are recording in our credit side. So all of the above is the right answer. Yes, chali. Now, next question. Which of the following are the common errors in the branch daily statements? A. Wrong identification of the type of transactions. B. Recording of particulars in incorrect fields. C. Difference between the closing and opening balances in successive daily statements. D. All of the above. So basically here we are identifying which are the common errors in the branch daily statements. So here, wrong identification of type of a transaction. If I'm not aware about the type of a transaction, okay, here I have paid the salary, but I'm saying no, salary is my asset. Salary is my asset. If I'm saying like that, so of course I'm going to do wrong identification of a transaction. Recording of particulars in incorrect fields. Again, you are not at all aware that which field you need to select. Yes, that is again wrong. Might be I have entered into transaction with branch A, but actually in books I have written with a transaction with bank B, branch B. That is an error. Then difference between the closing and opening balances in successive daily statements. You know very well that in your bank, each day at the end of the working, you are recording your closing balance of cash. Next day again you are writing opening balance of cash. If you are not maintaining this properly, if there is any differences in opening and closing, of course this is going to be very common errors in your branch daily statement. Yes, so right answer of this question is going to be answered D. All of the screen. Very easy, very direct question, because first of all we need to learn about balance sheet equation. Yes, so before we proceed with this question, let me tell you about balance sheet equation. Now, balance sheet is the last stage in your accounting. Basically, here we are identifying the position of your business. And how do we identify that? With the help of assets equal to liabilities plus capital. Yes, this is the formula which you need to apply. Yes, so total assets equal to 9,50,000 as per the question they have given. Yes, details as per the given. Total assets 9,50,000, external liabilities 4,20,000. You need to calculate closing stock. Assets equal to liabilities, that is 4,20,000. Yes, plus capital. Yes, so C is equal to what? 9,50,000 minus 4,20,000, that is equal to 5,30,000. So right answer of this question is answer A. Yes, very simple, very quick. I hope balance sheet equation is clear. Assets means all your machines, plants, equipments, building on which you hold control. Yes, your ownership. Liabilities, that is your borrowing. Yes, that you have borrowed from bank, from your friends. Capital, as an owner, whatever amount you have invested, that is what capital. ठीक है, चलिए. So this is about balance sheet equation. Now, next question. While preparing the balance sheet of Mrs. Rohan Enterprises, the accountant got confused between bills receivable and bills payable and recorded the following. Bills receivable 70,000 was shown under liabilities. Bills payable 70,000 was shown under assets. All other items were correctly classified. The balance sheet total both sides were shown as 8,50,000. Now, what will be the correct impact on total assets and liabilities after rectification? Yes, A. Both assets and liabilities will increase by 20,000. B. Both assets and liabilities will decrease by 20,000. C. Both assets and liabilities will increase by 1,60,000. No change in total of balance sheet. Now, what you need to do here in this question, you need to identify about bills receivable and bills payable, transaction, how to record it. That is what major thing they're asking here. Now, if you see bills receivable, we can call it as BR. Yes, so bills receivable, that is your asset, whereas bills payable, that is your liability. Acha, why we prepare bills receivable and bills payable? Generally, we discuss this thing under bill of exchange. Yes, I hope you can recall this concept related to bill of exchange. When here is your supplier, yes, which is known as drawer, and here is your buyer, which is your drawee, correct? So what happens here? First of all, supplier sold good to buyer, but buyer says I don't have that much cash. So this supplier says okay, let's make one bill. Okay, let's say here one bill they have made for 1 month. Yes, so here this supplier becomes drawer, and here this buyer becomes drawee. So in the books of drawer, you will write this bill as bills receivable because that is an asset, because you are going to receive amount. Yes, for the drawee, this becomes liability that you need to pay after 1 month. So in the books of drawee, this becomes bills payable. Sorry. Okay. So bills receivable 70,000, bills payable 70,000 again. But what here Mr. Rohan accountant did, he showed on wrong side. Hana, bills receivable on liabilities, bills payable on assets. That is wrong. So while doing the correction, though you will, what they did under liabilities, under assets. Okay. Here bills receivable they have written, that is 70,000, bills payable under assets, that is 70,000. And total, because of other assets and liabilities, total is equal to 8,50,000. 8,50,000. Correct? But now you know that this bills payable should be in your liabilities side, 70,000. This we are under asset side. So while changing these things, your amount will not be changing. No change in total of balance sheet. So right answer is going to be answer D. I hope this point is clear. Yes? Chaliye, next question. Which of the following is the correct classification? Okay. Bills receivable liability, bills payable asset. B. Bills receivable asset, bills payable liability. Both are assets, both are liabilities. Now, this is your homework question because here only we discussed about it. Okay, so I hope now this point is clear. So this question is homework now. Let's see the next question. Now, if a business's assets increase while its liabilities remain the same, what will happen to the capital? Now, let's say here, this is one rough balance sheet. है ना? Here you have capital, liabilities, assets. So, assets in, ठीक है. Let's say this is your before change, 10,000, 5,000, 5,000. So, total equal to 10,000. Total equal to 10,000. ठीक है. Now, business's assets increase while its liabilities remain the same. Now, what they're saying, let's say this is before change balance sheet. This is after change in values. This is that balance sheet. है ना? So, this is assets. So, let's say now increase in assets by 2,000. So, this total 12,000. But what they are saying, liabilities will remain the same. Are you going to change liabilities? No, 5,000. That means here ultimate effect will be in your capital. So what will happen to the capital? Capital will increase because to settle both the sides, you will be increasing capital by 2000. So right answer is going to be answer A. Very direct but very important from exam point of view. Chaliye, next question. What is the key purpose of an audit in the banking sector? Audit, yes, there are different types of audit in a bank. You can see that is concurrent audit, yes, then internal audit, then you have stat audit, yes or no? So why third party or your own bank staff they are doing this audit to increase the profit margin of banks, or to ensure compliance with industry standards and regulatory norms, or C, to prevent the use of faulty computerization information system, or D, to emphasize arithmetical accuracy in financial statements. Yes, what is the right answer? Right answer is answer B. Yes, here through the audit you are not increasing any profit. Basically, third parties coming and they are reviewing your reports. Yes, they are cross-checking your transactions, your entries. So that is the need of audit. So right answer is answer B. And C, they are saying to prevent the use of faulty computerized. No, audit doesn't mean that surely they will identify some flaws, some default. No, they are just identifying, they are just doing the work so that they can give the proof that yes, all your balance sheet, all your working is as per some norms and regulations. Okay, and D, to emphasize arithmetical accuracy, that is also wrong. Chali, next. What is the significance of computer assisted audit techniques known as CATs in information system audit? A. CATs primarily replace manual audit techniques. B. CATs are used to eliminate all control weaknesses. C. CATs enhance the effectiveness of AIS audits, particularly in critical areas. D. CATs are only suitable for areas with minimum transactions. Yes. So what is the need of CATs here? Basically, CATs enhances the effectiveness of audit through the information system, particularly in critical areas. CATs, they are not just replacing manual audit techniques. No, they are just not trying to eliminate, but they are enhancing the effectiveness that now whatever you are checking through the computers, with the help of computers with their softwares, now you are enhancing your work. Yes, with the help of technologies, now you are actually checking in much more in depth. So right answer of this question is answer C. Next, which among the following are included in the scope of audit? A. Determine the effectiveness of planning and oversight of IT activities. B. Evaluating the adequacy of operating processes and internal controls. C. Determining adequacy of enterprise-wide compliance efforts related to IT policies and internal control procedures. D. Identifying deficient controls, recommending corrective actions to address deficiencies and follow up, and ensuring that the management effectively implements the required actions. Yes, you need to identify out of these four options which is the scope of audit. Yes, what do you think? Answer option A, B, second option B, D, third option A, B, and C, last option that is A, B, C, and D. So right answer is all the above. Now, why all the above is correct? Let's read here. So basically, here when we are talking about audit through the computers, through the softwares, this gives the adequacy of operating processes and internal control. Yes, with the help of this technology, now you can review your operating process, your day-to-day process, along with how control you are putting. Then next, through this you can ensure enterprise-wide compliance with IT policies and internal control procedures. Through this, audit, you can check whatever compliances are there. Yes, as per Banking Regulation Act, as per RBI, as per your own bank, are you complying with those or not? Here, IT policies are as per that or not. Then C is it identifies deficient controls. Yes, also after identification of defaults or deficient controls, here you can see the corrective actions as well. And not only one time correction but follow up is also there, means whatever differences, whatever deficiencies you have identified, whether in future after correction of it, are you maintaining that thing or not? That is what follow up means here. Then IS audit aims to enhance the security, reliability, efficiency of information system while aligning them with organizational objectives and regulatory requirements. So basically here, with the help of software, with the help of IS audit, now you're just not in eliminating manual audits, human errors, but you're also reviewing at the same time. You're also checking whether all the compliances of different stat bodies you're following or not. Yes, regulatory bodies or not. So right answer is actually D. That is the reason. Yes, chali. Coming to next question now. Start audit, concurrent audit, and internal audit reports, and test checkings to form its opinion. So, which report is issued by a stat auditor? Yes, A. Stat audit report as per SA 700 0506 issued by ICI. B. Long form audit reports as per the RBI guidelines, or C. Tax audit report as per income tax, or D. All of the above. Now remember, though when you are doing start audit, acha, when we say start audit, you are going to appoint third party. Yes, generally you are appointing chartered accountant firms. Yes, concurrent audit, that is your daily audit. Again, this audit is done by third party only. Okay, but internal audit, that is actually done by your own staff, or if you want third party support you can take that. Yes, so that is what internal audit. Basically here internal audit, they are checking your norms, policies, and then they are reviewing it. So as per this, which are the report, or which is the report issued by stat auditor? That is all of the above. Yes, all of the above reports are issued here, and remember, you have different deadlines to submit it. Okay, so right answer of this question is answer D. Chaliye. Now coming to next question. Identify the incorrect statements among the following with regard to statutory audit. Acha, so now you have five statements you need to identify. Out of these five statements, which are the wrong statements? Okay. A. First one, it can be conducted by anyone. Second, in the case of banks, subsection 1 of section 40, Banking Regulation Act 1949 requires that the balance sheet P&L loss account banking company should be audited. In third, independent audit of the financial statements of banks is not important for healthy, safe and sound banking system. Fourth, stat auditor looks at the entry cases of the banking transactions. Fifth, stat audit does not look at the loans, advances, compliance with priority sector lending requirements like CRR, SLR, CRAR, and etc. So basically, even if you don't know about audit, if you are working in a bank, these options are very easy. Though if you're reading, if you're seeing this question for the first time, you can say, oh my god, this is a lengthy question, this is going to be a tricky question. But after reading this question, I think this is one of the easiest question, where you can say though question is lengthy, but concepts are very common. If you're working in a bank, you know this activities. Yes, so right answer is actually all the statements are wrong. This audit cannot be done by anyone. Yes, we have some limits, we have some guidelines, like who can do this audit. Yes, given by law. Then here when we say section 40, that is wrong. That is given under section 30, that your bank should uh, conduct audit on balance sheet and your P&L. Okay. Then third, what they're saying, independent audit is actually not important. Yes, for the healthy, safe, sound, then anyone can do fraud. Yes, so this is again wrong. Then fourth, they are saying statutory audit looks at the intricacies of the banking transactions. So no, does not look at the intricacies of the banking transactions, which are looked by concurrent and internal audits. Yes, they rely on concurrent audit and their internal audit reports, and if they want, they will do just a, you can say, checking, but not in-depth checking unless and until it is required. Yes, statutory audit does not look at the loans and advances compliance with proprietary sector lending. Again, this is wrong. No, statutory audit will look on all this, you can say, list. So right answer is answer C here. Chaliye. So with this we complete our today's MCQs. But from 7th April we are starting our JIB 3000 MCQ booster series, and under this batch we are going to deal with exam level MCQs, that to 3000 subject wise practice. You will be getting PYQs plus expected questions for upcoming attempt, then concept clarity through the questions, whatever questions you are going to solve. Along with that, we will be giving you conceptual clarity. Yes, so you can enroll in this by using one coupon code, that is Y895, for the maximum discount. And this is our Telegram group. You can scan this QR code. You can join my Telegram group for the maximum discount. And for the, yes, maximum discount, you have this coupon code. For the formula sheets, summary sheets, any updates, all these things are given through this Telegram. Yes, so through uh, with this, let's wind up this session. So thank you everyone for joining. Take care. Hello everyone, welcome to JIB CIB English Medium channel. My name is Aarti and I hope you all are doing good. So if you're planning to clear your JIB May 2026 exam in your first and single attempt, then do remember that this is your quick revision series. As you know, today we are going to start unit 13 and 14. So what you need to do right now, if you haven't subscribed to our channel, do subscribe it. Share this session with your friends and colleagues so that they can take advantage of this session and they can also practice lots and lots of questions. So let's start this session without any delay. Okay. So on your screen you can see first question. Let's read it together. So consider the following statements regarding adjusting entries. Yes, adjusting entries. So this question is based on this topic. Yes. Now here you have three options. Okay. First, adjusting entries ensure proper matching of income and expenses. Second, every adjusting entry affects at least one balance sheet account and one P&L account. Third, adjusting entries are recorded only when cash transactions occur. Now, here is the final question. Which of the above statements is or are correct? You need to identify correct statement. A, 1 and 2 only. B, 2 and 3 only. C, 1 and 3 only. D, all of the above. So basically, adjusting entries means what? See, while doing, any transactions, we know that we have debit and credit. Yes, we know these two things. We have debit and credit. Correct? For passing this debit and credit, we need to apply golden rules of accounting. Yes. Now, what happens that we are working in a financial year, we are following accounting year rule. Yes, which starts from April and which ends on 31st March. Yes or no? So this is our accounting period. Now, during this accounting period, if any transaction, yes, if let's say during March month, okay, during March month, you have prepaid amount for, let's say, April 2027. Okay, let's say this is your 27. Okay, suppose you prepaid the amount for 2027, means amount belongs to next financial year. Yes, amount this financial year, let's say this is a 26-27, but in this financial year you paid one prepaid amount, yes, which belongs to next financial year, but you have paid here. So in this case, we are calling it as a prepaid transaction. Yes, because you have paid before the due date. So that is what prepaid. Yes, so why we are doing this prepaid transactions? So that we can pass adjusting entries. Yes, now Second type of adjusting entries you can see, that is outstanding. Yes, outstanding means what? You are working, yes, during this financial year, but what happens during March month? Every month when you work, at the time of closing, yes, suppose you are working in April 26, you will be getting salary on, let's say, on 2nd May. Okay, that is okay. Let's say you are working in June. You work full June and you will receive salary on 2nd July. You will work full July month and you will get salary credited on 2nd August. But what happens? Let's say you are working in March. Okay. Basically, you are working in March and your salary will be credited on 2nd April. But we are closing our books on 31st March. Yes, what is happening here? You have done your work, Hana, you have done your services during the March month, but you will get the salary in next financial year, that is 2nd April. So in this case, here your bank will show your salary as outstanding salary. Outstanding means you have done your work, but amount is yet to be received. Prepaid means due date is not in this month, but we are paying in advance. Yes, like advance we are paying, that is the same case of prepaid. Okay, so why we are doing this? Why we are passing prepaid or outstanding transactions? These are known as adjusting. Now why we are doing this? We are doing this adjusting entries so that we can ensure proper matching of income and expenses. Yes, so first statement is true. Why we are doing this? So that we can actually show true, transactions or matching transactions. Second, now every adjusting entry affects at least one balance sheet and one P&L account. Yes. Here salary. Yes. Here rent. So basically, let's say salary outstanding. Hanam. Let's take the same example. Salary outstanding. OS is the short form of showing outstanding. Okay. So what entry we need to pass? Salary account. Acha. Acha, before we discuss this salary outstanding, if you have received the salary, yes, salary paid, how bank will show this entry? Salary account debit to cash account. Yes, here this is your nominal account, this is your expenditure, expenses. Here cash is paid as per real account. But outstanding means, did you receive your salary? No. So in this case, what we are doing, we are writing salary account debit because that is our expense, but you haven't received your salary. So for that reason, we are going to write not cash, but salary outstanding account. So this salary is actually your nominal ticket and salary outstanding is going to be your personal representative. I hope you can recall this point. That is the reason nominal account will be in transferred to P&L and this representative personal account will be transferred to your balance sheet. Yes, so every adjusting entry affects at least one balance sheet, which will be your adjusting entry like outstanding, prepaid. Yes, and on the other hand, P&L account that is going to be debited. Yes, that depends. That is prepaid or that is outstanding. This is going to be your nominal in nature. Nominal nature. Third one, adjusting entries are recorded only when cash transactions occur. No, 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 no. This is totally wrong. So first and second only is your right answer. So right answer of this question is answer A. Yes, chaliye. Coming to the next one. While finalizing the accounts of Messrs. Ritu Enterprises for the year ending 31st March 25, the accountant observed the following. Yes, now we are talking about one business. Now in that business, there are different points which you need to see. Total insurance premium paid during the year, that is 36,000. ठीक है. The policy covers a period of 12 months from 1st Jan to 31st December. Now, the accountant debited the entire amount to insurance expense account. What amount should be treated as prepaid insurance? Okay. Acha, before we discuss this question, tell me, in India, we are following which, you know, accounting year? We say 1st January till 31st March as your accounting year, or 1st April till 31st, sorry, this is 31st December, 31st December and 31st March. Yes, tell me, option A or B? Yes, yes. So right answer is option B. Correct. We are not following calendar year as your financial year. We follow financial year, accounting year from 1st April till 31st March. Now this is the concept, accounting year concept, which every business needs to follow. If you are working in India, you need to prepare your books, your transaction entries from 1st April till 31st March. Yes. So here what they are saying, ठीक है. So this is, let's say, 1st January 2025 and this will end on 31st December 2025. ठीक है. And from here you will see next calendar year, that is going to be 1st January 2026 till 31st December 2026. Now, here you have paid premium of your insurance, that is 36,000. And how you paid this? You have paid this amount from 1st January till 31st December. Okay, this is your 36,000 amount. And what accountant did? Accountant debited the entire amount to insurance expense. Yes, what he did, he transferred whole amount in your insurance. Correct? Now, let's say here you are here, let's say, wait a second, let me add, now this is 1st April 24 till 31st March 2025, and from here you will again start your next financial year, that will be ending on 31st March 2026. Yes, so this is your first financial year, which is 24-25, and this is your second financial year, red one here, that is financial year 25-26. You paid here, yes, you paid here your insurance amount, your insurance premium amount, correct? So basically here, if you're closing your books, if you're closing on 31st March 2025, so total amount what you will show under insurance, that is going to be 36,000. No, basically for the financial year 24-25 you will be showing 36,000, and how many months are actually belongs to 24-25, that is January, February and March. So 3 divided by 12, 36,000 belongs to 12 months. But here you have two financial years. Okay, for financial year 24-25 you will show how much amount, that is going to be 36,000 into 3 divided by 12, so that is going to be 9,000. Yes, and for the financial year 25-26 you will show remaining amount, that is 36,000 minus 9,000, that is equal to 27,000. Correct? So what amount should be treated prepaid insurance in the balance sheet. Now, if you're closing your balance sheet for the financial year 24-25, though you will show under insurance 9,000, but 27,000 you will show as prepaid insurance. So right answer of this question is answer C. Yes, answer C is your correct answer. Chaliye. I hope this point is clear. Next question. Now this one is easy one. Opening stock, purchases, wages, carriage inwards, closing stock, COGS. You need to calculate here. What is COGS? COGS is equal to cost of goods sold. That is what COG is. Cost of goods sold. Let's say, suppose you purchased calculator. Okay. This is your calculator. Now, what is the selling price? What is the MRP of calculator? Let's say 300. But that shopkeeper here will be earning some profit. Hana, let's say shopkeeper purchased this calculator. Shopkeeper purchased this calculator for 250 and he added profit of it, that is 50. That is how 300 you are making. Yes, how you got 300? Here shopkeeper added purchase for 250 and he added 50 rupees profit. That is how MRP is equal to 300. So this 250 is your cost of goods sold. Okay, what is the cost of that calculator? That is 250 because 300 is your selling price. Yes. Now, what is the formula of COGS? Formula of COGS is equal to opening stock plus purchases. If you have any direct expenses, added minus closing stock. Okay, so COGS here is equal to 1 lakh plus 3 lakhs plus 50,000 plus 20,000. This amount will be added minus 1,20,000. So this is equal to 1 lakh plus 3 lakhs plus 50,000 plus 20,000 minus 1 lakh 20. So right answer is equal to 3 lakh 50,000. Yes, so right answer is answer A. This is the formula which you need to apply. Correct, Chali. So again, similar question you have here. Oh, I think same question is repeated. So just ignore this question now. Let's read the next one. A company issued shares of 10 each. A shareholder holding 1000 shares failed to pay the final call rupees 3 per share. The company forfeited the shares after receiving rupees 7 per share. What amount transferred to forfeited share account? Now, what is the meaning of forfeiture? See, for example, here Reliance issue 100, let's say 1000 shares only, 1000 shares to Mr. A. Okay, here is Mr. A. Mr. A is equal to shareholder here. And Reliance said, Mr. A, if you want to purchase this 1000 shares, you need to pay amount in installments. Okay, like share application, you need to pay, let's say 4 rupees. Under allotment, you need to pay 3 rupees. Correct. And then first and final call, you need to pay 3 rupees. This is how you need to pay total 10 rupees. Correct. Let's say share application amount you need to pay on 1st March 26. Allotment amount you need to pay on 7th March 26. First and final call you need to pay 14th March 26. Here Mr. A paid this first two amounts. Yes, Mr. A already paid these first two amounts. This is already paid. Yes, this one is yet to be paid. So what happened? On 14th, Mr. A said, I will not pay this amount. Mr. Deny about this payment. Mr. A says, I will not make the payment. So in this case, what Reliance management can decide? If Mr. A refuses for the payment, okay, in that case, Reliance management can decide to cancel name of Mr. A. Management of management of Reliance, what they decided to cancel name of Mr. A from their books. Yes, so in this case, whatever amount is already paid by Mr. A, that will be, forfeited. That will be taken by Reliance only. Here, Reliance will not, you know, uh, refund it. Like when you are giving security deposit, that amount is never refunded. Same here, whatever amount as a shareholder you have already paid, that amount will never be refunded. Yes, so in this case, what is happening? Though management said that now we will be canceling Mr. A's share, but in that case, yes, though you are canceling Mr. A's share, but in that case, management will also retain that amount which already paid by Mr. A. So what is the amount Mr. A already paid? That is 4 and 3. Yes. So what is the forfeited amount? Forfeited amount is 4 plus 3. So total 7 rupees into 1000 equal to 7,000. So right answer is answer B. Forfeiture means whatever amount shareholder already paid to you, you will retain it. You will not refund it. That is what share forfeiture account. Okay, so this is how you need to calculate. And this last 3 rupees, which is not paid by Mr. A, that is going to be calls in arrears. Okay, chale. Based on the same concept, you have one more question, and this is now your homework question. Let's see whether you can pass journal entry or not. Now, always remember, share capital is uh, always has this credit balance. Okay, always has credit balance. But when you are actually forfeit forfeiting the entries, yes, when you are passing forfeiture entries, you need to reverse the entries. You need to reverse this entries. So while reversing, your share capital, which always has credit, will now show debit balance. Okay, and whatever amount you are retaining under share forfeiture, that will be under credit side, and remaining amount you will show under calls in areas. Now just you need to calculate the right amount and you need to check which entry is correct. Yes, so now this is your homework question and this is your journal entry that you need to pass. I hope now this point is clear. Chaliye. Next, shares of rupees 10 paid at 20% discount. A shareholder holding 500 shares paid rupees 4 per share and defaulted. Shares were forfeited. Now, what amount is transferred to calls in arrears? Yes. Now, what you need to calculate here, you need to show what amount you will transfer under calls in arrears. So, basically, rupees 10 is the amount, but you are providing discount here of rupees 20%. So, that is 10 into 20%, rupees 2. So 8 is the amount which you need to take from shareholder. Now shareholder holding 500 already paid how much amount? Already, sorry, paid amount, that is 4. Okay. And remaining 4 is actually default amount. This is the default amount. So what you will be doing, 4 into 500. So 400 into 500, that is going to be 2000. So right answer is answer A. Yes, and this 400 which already paid by shareholder, in case of forfeiture, you will transfer it into forfeiture account. Yes, so right answer is answer A. Yes, so what amount is transferred to calls in arrears? What amount is not received by shareholder? That is 2000. First question on your screen. Let's read it together. In case of a public company, which statement is not mandatory in the financial statements? Okay. So if we talk about financial statements, yes. So under this we need to prepare balance sheet, P&L account, cash flow statement, statement of changes in equity, and explanatory notes. Yes, these are the 5 things that you need to make under financial statements. Now, while making these notes, you need to comply with Schedule 3 of Companies Act. Yes. Now, while doing this, there are some points which you need to remember. There are few companies which are not required to prepare cash flow statements. For example, small company, dormant company, they are not required to do this. But if you are other than those type of companies, then you need to comply with all these 5 different statements. Yes. So here they are talking about public company. Yes, means like a listed company. So if you are a listed company, then you need to prepare all of the above. You need to prepare balance sheet, P&L, cash flow statements as well. So right answer of this question is answer D. Remember, in your unit 15 you have a whole, you can say, format of balance sheet and profit and loss account. You need to prepare your statements as per that. And remember, under which head which details you will write, that is also given in that. So this is your first question. Now coming to second one. A company incorporated on 15th March 25 will have its first financial year ending on. You have 4 options. Chaliye. So let's discuss about accounting year. As per your accounting period concept, we need to prepare our book from 1st April to 31st March. Okay? This is also known as financial year. This is also known as financial year. Yes. In India, we never follow calendar year. We never follow calendar year. Calendar year means 1st January to 31st December. In India, if you are doing business, we are not following this calendar year. We are following this financial year, which is also known as accounting period, as per accounting period concept. Yes. So generally, we start our business from 1st April and we close our books on 31st March. This is general rule. But suppose this is your first financial year end. Suppose you incorporated in this year. Okay. Let's say this is your financial year 25-26. You incorporated means you started your business on 15th October 25. Yes, this is your starting date. So, which financial year you are going to follow? Of course, 1st April 25 till 31st March 26. I hope this point is clear. Wait, let me close my video. So, this is our financial year that you need to follow here. Now, you are starting your business on 15th October 25, means this is before 31st December. Okay, this is before 31st December. So you will be closing your books on 31st March 2026. If you are incorporating between this time period, means from April till December, if you are incorporating between this time period, then you will be closing your books in upcoming financial year end. Okay? But the point is, which you need to remember, suppose with the same question, suppose you incorporated on 15th February 2026. Means again, though you are following this financial year only, financial year 2025 2026. But the point is, which you need to remember now, Here is your 31st December. Yes, this is your 31st December 25. You are incorporating your business on 15th February 2026. If you're incorporating after December till April, then you are going to close your books not in this financial year. You will be closing in upcoming next financial year. Means this is going to be a financial year 26-27. So you will be winding up your business on this financial year. Okay? This is the logic, this is the point which you need to remember. Yes? I hope this point is clear now. Yes? Chali. Okay. So, next question. Now let's solve this question here. What they're saying that you incorporated on 15th March 2025. So let's make one timeline here. Yes. So which financial year you are following? 24-25. Yes. So this is going to be 01 April 25, 31st March 25. Okay, so now this is your 31st December 2025. So you are incorporating on 15th March 2025. Okay, you are incorporating your business on this day. Okay, so soon you will be winding, or you can say you will be winding upon 31st March 25, but this is not the rule. As you are incorporating after 31st December, you are going to wind up your business in your next financial year, that is going to be 25-26. So you will be winding up your business not in not in this financial year, but in your upcoming financial year. So right answer is going to be answer C. Okay, so right answer of this question is equal to answer C. I hope this point is clear now. Yes, chaliye. Coming to next question. Contingent liabilities shall not be classified as A. Claims against the company and not acknowledged as debt. B. Guarantees. C. Other money for which the company is contingently liable. Or D. Loans and advances to related parties. Now, in simple terms, let's discuss about this. So first, liabilities means your obligation. Take it. About obligation. Contingent means 50-50. Contingent means 50-50% liability. You are not 100% sure that you need to pay that liability amount. You are not at all 100% sure. So that is what contingent liabilities shall not be classified as what? Yes, this is your contingent liability where against the company there is one claim. Let's say someone filed court case against your company. That is what your contingent liability, because that is not 100% sure that you need to pay the amount. Yes. Then guarantees. When someone takes guarantee or when you take guarantee on behalf of someone. So if that person defaults, that is not 100% sure that that person will default for sure. But if he does that, then you need to pay. That is also contingent liability. Other money for which the company is contingently liable. If there is any other case in which there is 50-50% probability whether you need to pay or not, then you will be classifying it as contingent liability. But D option, which says loans and advances to related parties. Here you have given 100% amount to your related parties. Yes. So this is not your contingent liability. These are advances which your company has provided to their related parties. So right answer of this question is answer D. D is never classified as your contingent liabilities. Next question. The following transactions are extracted from the books of XYZ Limited. Now, here you have few transactions like sale of old equipment 50,000, dividend paid 20,000, loan taken from bank 1 lakh, salaries paid 60,000, interest received 10,000. So which of the following is an investing activity? Now here what you need to do? Here you need to identify investing activity. Okay, so before we solve this, let me tell you, as per your cash flow statements includes all your inflows and outflows of cash. If there is inflow and outflow, then of course you are going to record in a cash flow statement. Now, here you have three different types of classification. First is your operating one, second is your investing one, third is your financing one. Okay? Operating means your day-to-day business. Whatever you are earning on daily basis, that is going to be operating, your operational activities. Investing means where you are, generating assets, where you are actually preparing your assets. And financing means where you are borrowing. Yes, in case you are borrowing, then that is known as financing. This is about borrowings. Okay, so day-to-day business known as operating activities. If you are creating assets, whether you are purchasing assets or when you sell your assets, that is classified under investing. Same for borrowing, when you are generating funds, that is classified here. Let's say here you can say equity, let's say here debentures, preference shareholders, all are covered here. So in this question they're asking about investing activity. So sale of old equipment, this is your investing activity. Dividend paid, not at all investing activity. Loan taken from bank, this is financing one. Salaries paid, interest received, these are not your investing activity. So right answer is answer A, sale of equipment, right? Sorry, answer C. Yes, chaliye. Coming to next question. As per Ind AS 1, the statement of cash flow is optional financial statement. This is optional? No. Part of notes to accounts? No. Only required for listed companies? No. Part of complete set of financial statement? Yes. Already when we started this session, we discussed about financial statements, and as per that we need to prepare 5 different types of financial statements. Yes. So one of them is your cash flow statement. So right answer is answer C. Remember in exam they can ask what is the name of Ind AS 1. Yes, under Ind AS 1 what we cover. Yes, like Ind AS 16, Ind AS AS 10. These are very important accounting standards. And for your exam, accounting standards are very, very important. Chaliye. So right answer of this question is answer C. Coming to next one. Now, which of the following is an example of investing activities? Okay, now I hope you can identify right answer. Payment of wages, purchase of buildings, issue of debentures, payment of dividends. Yes. So this is your homework question, everyone. This is your first homework question. And share your answer to the comments. See, if you haven't started your preparation, then this is how you can remember these points. Hana, but if you have already started, then also you need to revise the silly and simple questions. Why? Because in exam, though they are not going to ask this much silly questions, but in lengthy questions, if they ask, your concepts should be clear. And this is how you are going to clear your concepts, by revising the same type of questions. Yes, easy questions, difficult questions, very difficult questions. That is how. Yes, chaliye. Next question. Which of the following is classified as operating activities? And how we define this operating activities? Operating activities means that is your day-to-day activity that you are doing on daily basis. So A, sale of machinery, B, cash receipts from customers, C, issue of equity shares, D, repayment of loans. Suppose you are working in a bank. So are you going to purchase machinery on daily basis? Of course not. So that is not your day-to-day activity. Then issue of shares. Are you going to issue shares on daily basis? No. Once you will issue it, you will utilize that money for lifetime or for some time period. So answer C is not your right answer. repayment of loan. Whatever loan you have taken, you need to repay it. You're borrowing. Yes, so that is also not your right answer. Correct answer is answer B. Cash receipts from customers. On daily basis, this customers will come to your shop. They will purchase goods. They will give cash to you. Or if they are purchasing on credit, on future dates, they will give you or they will return this amount. Yes, so right answer is equal to answer B. Yes, then next. Okay, everyone. So let's see whether you can solve this or not. A company reported the following transactions during the year: cash sales, purchase of machinery, issue of shares, payment to suppliers. Question is, cash generated from operating activities you need to calculate. Here we need to solve this question and we need to calculate how much cash we have generated from operating activities. Okay, so cash sales, this is your day-to-day activity, of course. So OA. Okay. Purchase of machinery, is this your day-to-day activity? Of course not. Then issue of shares, this is your day-to-day activity? No. Payment to suppliers, yes, this is also your day-to-day activity. So under operating activities, we have identified two such activities, that is cash sales and payment to suppliers. Okay. Now, next thing you need to tell me, in cash sales, you will see inflow of cash or outflow of cash. Yes, you will receive cash. Of course, when you are receiving it, your cash will increase. So this will be added in your bank account or in your cash. Next, when you are paying cash, that is going to be inflow or outflow. When you are paying it, cash is going out. So 90,000 here you have paid. So this will be subtracted. So what is your answer here? 1,10,000. Okay, so right answer is answer A. You know the concept, just you need to apply it. And how smartly you apply it, that is all about your JAIIB exam nowadays. Okay, chaliye. Next, operating activities mainly include. Okay, so this is your homework number 2. Let's see whether you can solve these two homework or not. Purchase of machinery, issue of shares, principal revenue generating activities, or borrowing from. The format of balance sheet and P&L account for banking companies is prescribed in. Four options you have. A. Schedule 6 of Companies Act 1956. Third schedule of the Banking Regulation Act 1949. C. RBI Master Circular on financial statements, or the Schedule 3 of Companies Act 2013. Now out of these four options you need to select. For the banks, when you're preparing balance sheet and P&L Act, it is given. So that is given under option B. Third schedule of the Banking Regulation Act. This Schedule 3 of Companies 2013 Act tells all the format for companies. Okay, not for the banks. For the banks, we have our own specific regulation that is given under Banking Regulation Act. And which format we need to use? Yes, that is also given in the third schedule. So right answer of this question is answer B. Okay, chali, coming to the next question. Now we have a case-led question. So let's read it together. Now ABC Bank Limited, a banking company incorporated in India, has prepared its financial statements for the year ending 31st March. The board of directors consists of 2 directors along with a manager who is responsible for day-to-day operations. While finalizing the financial statements, a discussion arises regarding the power authorization and signing requirements as per the relevant provisions of the Banking Regulation Act. Now, one director suggests that only one manager's signature is sufficient, while another insists that all the directors must sign. The compliance officer clarifies that the signing must be done as per statutory requirements under Section 29. So, as per Section 29 of the Banking Regulation Act, who should sign the financial statements of ABC Bank Limited? Yes, everyone. So, now it's your turn. You need to tell me here which option is correct. Yes, take your time, read this question again and identify right answer. You know, Unit 17 is very important unit in your module B. Yes, now if you see your section 29, yes, as per that, what they're saying for the banking companies, if you are incorporated in India, let me tell you, if you are a bank and you are registered in India, okay, you are starting your business in India, then your financial statements should be signed by manager or principal. Yes, if you are Indian bank, you incorporated in India, then you need to take sign from manager or principal officer. This is one condition. Along with that, you need to take signature by at least three directors. But in our bank, we have only two directors. Then there is one more point. Then take all directors' signature. Okay, then what you need to do, you need to take all the directors' signature in that. That is what given for banks which are incorporated in India. Next is, what if our bank is incorporated outside India? Then in that case, if you are having branch in India, for example, like HSBC Bank, yes, that is a foreign bank. Here is HSBC Bank, yes. Here you have your Indian banks, correct. So here under HSBC Bank, though their main office is outside India, but in India when they are opening their branches, then they need to take signature by of a manager or agent, yes, who is residing in that in that principal office. So this is given under section 29. Though you have prepared financial statements, though you have complied all the laws, but when you need to take signature, oh wait a second, wait a second, yeah, so basically, when you have prepared your financial statements as per your Banking Regulation Act, then for the authorization to make that document legal, yes, genuine, you need to take signature. And if you incorporated your bank in India, then take manager or your principal officer along with three directors' signature. If your bank incorporated outside India, then take signature of manager or agent. So now tell me, out of these four options, which is the correct option? Here, banking limited incorporated India. Hana means this is your Indian bank. Now, they have prepared their financial statements for 31st March. Very good. Now, board of directors consist of two directors. Okay. So, how many directors you have in ABC Limited? You have only two directors. Yes. Now, along with the manager who is responsible for day-to-day operations. Okay. Along with these two directors, they have their own manager. Now, while finalizing, their discussion goes on about proper authorization and signing requirements. So, one director suggests, okay, there is one director who suggested that only one manager signature is sufficient. Here, one director says only manager signature is sufficient. That is correct? No. While another insists that all directors must sign, and the compliance officer clarifies that the signing must be done as per Section 29 of Banking Regulation Act. So here, only the manager or the principal officer? No, this is wrong. Then, only the chairman and managing director? Incorrect. Auditor director? No. Right answer is at least three directors if you have more than that or up to three. Or if you have less than three, then you need to take signature of all the directors. Means in ABC Limited, you need to take signature of all the two directors, and along with that, you need to take signature of manager as well. Yes, this is and means plus. This is not or. Okay, this oblique sign is equal to or. Yes, this and means plus sign. So right answer of this question is answer B. I hope this point is clear now. Okay, chaliye. Now coming to the next question. Now which of the following correctly represents the classification and schedule number as per the prescribed balance sheet format? Okay. So now this question is again from final accounts of banking companies, and format, their schedule number, particulars name. This part is very important because in exam they are asking direct questions from this. So I'm giving you 1 minute. Identify which option is your right answer, because if you are my student, if you have done my classes, then you know the trick. Yes, then please tell me the trick and please solve this. Tell me which is the right answer here. CRM, DBO, CBI, AFO. I hope you can recall this. And then CL. Yes, 1, 2, 2, A, 3, 4, 5. This side is your liability side. ठीक है? From this 6, 7, 8, 9, 10, 11, and this is your 12. And this side is your asset side in your balance sheet. Now what they're asking about deposits. So here, under which alphabet you will show deposits? That is going to be D. है ना? तो schedule number is 3 for deposits. So deposits assets? No. Deposits assets? No. Deposits are equal to liabilities. So 3 or 4? 3 is for deposits, 4 is for borrowings. I hope you can recall this. Hana, C means your capital. R means reserves and surplus. M means minority interest. Here D means deposits. B means borrowings, and O means other liabilities and provisions. Similarly, for asset side, C means your cash and bank balances with RBI. Then B means your balances with banks and any money at call or any amount of short notice. Then I means investment. Then A means advances. F means fixed assets. O means other assets. And CL means contingent liabilities. Yes, so here first thing is your deposits. So right answer here is answer B. Yes, that is going to be liability side, deposits 3. Then A you will see under assets. Yes, which schedule number? Schedule number 9. So right answer is answer B. Now this mnemonic you need to remember. ठीक है, CRM, DBO, CBI, AFO, and last CL. I hope you remember this. Otherwise, you will find this question very difficult. Yes, you will see direct questions based on your balance sheet format, P&L format. So please revise this particular mnemonic as much as you can. चलिए, now coming to next question, everyone. A bank is preparing its financial statements and it notices that it does not have any borrowings. Now, during the year, as per the prescribed format, what should the bank do? A. Show it as nil. B. Show it with zero value. Omit it from the format. Or D. Show it under other liabilities. So basically, when you are preparing final accounts for banking companies, yes, you identify that bank is not having any borrowings during the financial year. So as per your balance sheet format, right point is going to be show it as nil? No. Show it with the zero value? No. What you can do, you can omit it from the format. This is given under general instructions, yes, of your balance sheet and P&L account. So remember, in exam they can ask questions from any point. So right answer of this question is answer C. Yes, you can omit. No need to show that amount with zero value. Unnecessary. Why you are making your balance sheet P&L very lengthy? So if you have any points, any value, then write it. Otherwise, you can omit it or you can eliminate it from your format. So right answer is answer C. Now, coming to next question. Again, one caselet we have. PQR Bank has recently launched multiple digital platforms, including a mobile app, website, and social media banking services. However, customers complained that when they started opening an account on the mobile app, they are required to re-enter all the details again if they visit the branch to complete the process. So to resolve this issue, the bank decides to implement a system where customer data is synchronized in real time across all platforms. Now, customers can start a process on one channel like mobile app and it can be completed on the another channel that can be your branch or call center without repeating information. So the management believes that this will improve customer relationship experience, enhancing market performance and customer retention as well. Now, the approach adopted by PQR Bank is best described as yes. So now you need to tell me which is the right answer here. Yes, you have few options: multi-channel banking, core banking, omni-channel banking, or digital only banking. So what do you think? See, right answer is omni-channel banking. Yes, this is one of the way of doing the banking business. Yes, where you have physical branch plus online facility. Yes, like your bank is using omni-channel banking. They have their physical branches where you all are working. Customers can deal, or they can deposit amount, they can withdraw amount, they can discuss with the managers. Yes, by visiting the branch, or they can solve all their issues through the app or as well, through the call centers as well. Yes, so that is which type of a banking? That is omni-channel banking. If you know the definition, this question is very easy. But if you don't know the concept, if you are reading the concept for the first time, seeing this much lengthy question, of course, in exam, you might feel difficult. Yes, but if your concepts are clear, this much lengthy questions, difficult questions are going to be very easy. Yes, chaliye. Now coming to the next question. Match the following. Now here's when match the following. Column 1 and column 2. Column 1 consists of analog computers, digital computers, hybrid computers. On the other hand, second column used in computerized accounting, used in scientific and mechanical fields, and combination of both, that is going to be analog and digital computers. So this is your homework question, everyone. You need to comment it down. Yes, you need to comment. Right, match the following. Yes, you need to type the answer. A for 2 or B for 1 or C for 3. Whatever answer it is, you need to type it. Yes, so this is your homework question. And let's read our next question here. Okay, so next question is, which of the following functions can computerized accounting software typically perform? First, maintenance of all statutory books and regular books of account. Second, generation of various reports like area-wise sales list. Third, conversion of foreign currency transactions into Indian rupees. Fourth, valuation of closing stock at year end. Or fifth, preparation of consolidated financial statements for entities with multiple branches. So you have four options. Yes, A, B, C, D. Yes. Please tell me which is your right answer here. So right answer of this question is answer D. Now why D is correct? Now if you see banks, when they are using softwares, now software is capable of doing all the activities. Yes, they are able to maintain all your books as per laws, regulations. Yes, they can generate reports as well, not only final accounts but sales report, FD report, and number of reports you can generate in just fraction of second. Then currency conversion, of course, with the help of currency